All right, so welcome back to the Capital Mindset Show, everyone. I'm just setting up real quick, making sure everything's kind of working on my end. Let me actually just make sure if I hit just this. All right, just trying to make the chat works. Let's see here. Beautiful. All right, it does work. So we are good to go. Okay, so wow, what a week. I can tell you that. Some interesting developments have occurred in the past couple hours or days, to say the least. I'd say that, we saw the challenge by Everything Money towards financial education. That's really funny. I'm going to be doing an episode every Friday on a more lighthearted note, also kind of keeping the content rather the same in terms of analysis and stuff like that. That's not going to go away. Something I'm going to be adding to is kind of like a Friday news wrap up, so to speak, of everything that's kind of gone on, and I share my thoughts on it. And there's going to be an episode, the first of its kind, tomorrow on Friday. So we'll see how that goes, and then you guys can watch it and give me your feedback, whether or not you like it or not. And then, again, we're kind of learning as we go and adapting over time. So we are going to talk about Everything Money, RK, and because I can bring your comment up here, and I like it. So with that being said, so what can I say starting off the get-go? I mean, those of you kind of shared with me some of the little tidbits here and there, such as, for example, Paul's portfolio. You guys know that I've been rather critical here and there about Everything Money in the past, and I stand by all those criticisms. They still remain to this day. However, respect where respect is due. I think that a lot of the criticisms they kind of put out there against, stuff like financial education, Jeremy, is valid. And they've kind of been echoing a lot of the same thoughts. So if you watch their video, which you probably saw Paul not being too happy, and I can pull up the video here and we can watch it again together, but I guess most of you have already seen it. But yes, he did have some very colorful language, to say the least. And it was definitely a challenge against financial education, Jeremy. I think he was a little bit caught off guard to the severity of it, and I think again it's deserved. Hold on, I just lost you guys. Where did I throw you guys here? I threw you guys here somewhere. Okay, there we go. All right, I found it. So let me actually throw you guys here real quick, so I have both chats open just in case, because I like to have it all on this screen and then everything else here in front of me. So, and let me actually clean this up, because I was actually recording a video right before we actually got on here. So I gotta clean this up. By the way, I kind of shill out my Twitter. I'm gonna be more active on Twitter as time goes on. And yes, my brother-in-law, he's a lot more active on Twitter, so he's actually giving me advice. I'm not really active on Twitter whatsoever, except for, I guess now I'm trying to change it. I'm trying to find different ways to foster different levels of interaction, so I can get content out there in different little bite-sized pieces here and there that can be useful to people. So Twitter, I'm gonna try to be more active as well. So a little bit there. One thing I want to say before we actually continue on to the story is, as far as other kinds of content, I'm getting more and more out there, and it's going to be catered towards that analysis. I still have 126 individual stock requests, again, that are not repeated, but yes. Yes, Jeremy did react to the challenge. He actually did, and I covered that in the video that's going to be released tomorrow morning. So, but I can talk about it a little bit here too as well. So he actually reacted to the challenge and changed up some of the terms within the challenge. So Everything Money presented the challenge and said, okay, we're going to give it's $1 million challenge. It's going to be dispersed over the course of 10 years. Jeremy came back and actually changed the challenge, or I requested the change for the challenge to be about 300,000. Now, Jeremy specifically kind of targeted a more approached. Well, he basically made the rules that the only ones who can challenge him, and I guess credit where credit is due, but let's be fair, given the size. But he basically excluded strongman personal finance almost explicitly by saying someone that gets 10,000 views per video consistently. Okay, so that's. Well, I don't even think Everything Money does that, but I think that they get thousands of views, and then in some cases they do get tens of thousands of views per video. So that kind of basically excludes a lot of his other critics, and then he's basically targeting Everything Money. But in his response video, he actually calls him, I think, Ohio State man, even though Paul went to Michigan, but it's a little on the nose. And he calls himself the gas station manager as well. And I can actually let's pull that up. Let's just pull up the video. It's just better that way. So if we actually pull up the most recent one, and if you guys saw did he lose subscribers? I think he's lost subscribers. 728,000. I'm pretty sure he has lost subscribers. I don't really keep track of him on a day-to-day basis in terms of subscriber count or anything like that, but some of you might have the answer to that. But he titled the video titled My Response, and let's actually, sorry if I accidentally blasted your ears with that. But yes, so this is part of the video that I would like to show you. So Mr. Ohio State versus gas station manager. So he calls himself the gas station manager, which is kind of funny. But so he's a little playing around with the words there. And you can see here that he gave us some context on well, I'm kind of almost laughing at the context, but he gave us the two portfolios, and he calls his portfolio growth beast company, growth beast company, growth beast company, growth beast company, company that goes to zero, growth beast company, etc. And then on the other hand, he says that the other guy's portfolio is company with no growth, company with no growth, company with no growth, over and over and over again. And then number 6 and number 6 for his are both the bad stocks, because he calls it just China stock. So China stock referring to obviously Alibaba. That's obviously on the nose there. But one thing that I'll kind of actually say is something that was shared with me, and let me find where it is because I have it here. So it's one of it's someone out there shared this with us, and so we'll talk about it here today. Oh, didn't mean to do that. Let's put that there. And okay, so let me share the screen now. Okay, so this is something that we received. So this is actually from someone who's a follower of Everything Money. I took a little screenshot of it, but it's basically going over his portfolio. And yeah, so this is Everything Money's portfolio, or Paul's portfolio. I don't exactly know how up to date this is. I did a reaction video to his portfolio, and I remember a lot of these positions. I think one of the newer ones is Meta. He's down 50%. Oh my. But yeah, I don't know if I reacted to every single one of these holdings, but going down the list, this guy is basically saying, I'm sorry, Paul, I respect your process and your investing skills, but out of your 11 holdings as of the last portfolio update video, 10 of them are down. So I think some people are obviously feeding, Jeremy information. Obviously for both of them, they're probably both getting information to their various respects, but Jeremy probably has that information, so he's very confident in what he's saying, and that's basically what he's referring to or hinting at in this video. So it's obviously, kind of a targeted comment, but that's basically what he's saying there. And of course, the only company right now, according to that comment, that is up is the China stock, and that's again relative to whenever that was updated. So again, if you watch Everything Money's video, it's very colorful language, etc. So yeah, that is definitely the stuff that's going on. And of course, there's the Meet Kevin stuff that is still developing, which is absolutely hilarious. But I won't get into it unless you guys want me to. But anyway, there's plenty of content on there. I'm trying to keep it so that I'm covering content that other people are not covering, and you guys can find the other content elsewhere if you so desire. So I know where Jeremy lives. Okay, so that's what Strongman's TTCF short position says here. Okay, so if you know where Jeremy lives, that's a bit concerning for Jeremy at least. Okay, RK, what happened to Meet Kevin? I'll answer that. So Meet Kevin apparently, according to evidence presented by other creators, and not apparently, this public information, by the way, he was arrested in this beautiful state of Florida. He has become Florida man. And he wasn't arrested recently. He was arrested a while ago, a couple months ago. And it was probably when he was visiting. I don't know if he was or wasn't. I don't know the circumstance. I don't know anything. Just saying speculation that it might have been when he was visiting Ben Mala or something like that. But maybe not. Maybe it's for other reasons. But yeah, he apparently is charged with a DUI. Okay, and so he has a court case coming up soon. And I think it's on the 28th of July. So we'll see how that kind of pans out, but that's definitely exploding now, and all of YouTube's going to be talking about that for days on days on days. Everything's kind of put on the back burner. YouTube finance is going to turn into just a drama fest. That's everything and anything. It devolves into drama, into tabloid. Okay, because we all love it. Okay, it's our guilty pleasure in life. So. I guarantee you that's what's going to happen in the YouTube finance. It's going to do it. So we have a comment saying, I think Jeremy wins. And I think I won't actually say I don't know who's going to win, and that's actually the sad part because yeah, it could be that Jeremy does win, and if he does win, I mean, it'll be a severe blow to the ideology of Everything Money. And so, again, respect to Everything Money where Everything Money's due. I have my criticisms of them. I've been vocal about my criticisms of them. Now, if I were to, and I was discussing this in the Discord with some of you, if you were to compare Everything Money's private investments, it's a whole different ballgame. That's where you have to distinguish between a private investment, such as, for example, commercial real estate, the real estate holdings that they have, the private businesses that they have, versus something like an equity ownership in a publicly traded company. So someone who's really good at private business might actually not end up being good in publicly traded equities, because if you have it's really nuanced. It really is. It doesn't necessarily translate well. It can, and there's a lot of principles that do translate well, but it doesn't necessarily translate well on a one-to-one basis. So, yeah, Meet Kevin does take on a different meaning now. So, yes, again, like that's that. I can have fun with it. I can make memes about it, but I don't take pleasure in his misfortune. I don't take pleasure in anyone's misfortune. Some of you actually might believe that, he deserves that misfortune. All well and good, all fair game. Not going to disagree with you there. So, yeah. Oh, thank you, Austin. That was a nice comment. So I have to, fluff myself up a little bit there. Thank you so much for that nice comment. So one thing I want to highlight is kind of like a pat on the back is for those of you who don't know or haven't been with me for that long, you guys can probably, if you really wanted to, check back on all the portfolio updates. There was a portfolio update, and some of you might remember this, where I switched out Tencent. I bought Tencent and Alibaba for various reasons. Both I do believe that I will end up profiting on them. Right now I'm in the green on both. I don't have Tencent anymore, and that's where some of you are probably saying, but you don't have Tencent. Well, I used to have Tencent. I bought Tencent and Alibaba at the exact same time on the same day as announced on the exact same video back in a December video. And it was, intended with my criticisms with Chinese VIEs, et cetera, et cetera, et cetera. Won't get into that here. But what I want to highlight is kind of seeing how things have developed. If you actually check the portfolio now, you will probably see that the actual position in Prosus is up nicely, and actually up a lot more had I then stayed in Tencent. So had I stayed in Tencent, I would have not made the same amount of gains had I changed over to Prosus. And remember, if you recall, and that's what YouTube is at the end of the day, YouTube is a documentation of my thoughts, and you go see the recordings that are on here forever. And my thoughts at the time were that Tencent and Prosus, there was a delta that will not ever be closed permanently, but there was an increased delta because of sentiment. And so if my theory was correct and the vast majority of the underperformance was sentiment, and remember that I do not believe the market is pricing in the total risk of the VIEs. I don't think that. I think that that's not the case. Some people think that that's the case. My theory is that that's not the case. And I think that it's more so a sentiment of, delisting and all these things, which I don't think is really a risk factor, because I don't think China wants that, or even, some powers within the United States want that. So if that is to be true, then my behavior makes sense. And now when we look back at the story, it's not fully played out because I haven't taken profits yet, and I'm not planning on taking profits just yet. But so far, it has played out in accordance to that thesis, being that I believe that because it's sentiment driven, well, I should see an outperformance by Prosus as that sentiment, discount is reduced a bit. All right, so that's all well and good, and that's basically what I wanted to update you guys on. I might do an actual dedicated video to that, but it'll be for the case study more so than not bragging about being right on that. So. Yes, and as kind of a lot of the videos you've been seeing, again, don't really care too much about whether or not they get views or not. Just want to have those thoughts out there. Is a lot of these companies that are really interesting to me. A lot of the industrial companies that are looking really ugly in terms of an outlook perspective and how investors are kind of reacting to them. I actually find or see that you would see what is this? What is this? Oh. Okay, I don't know. Did I accidentally do something for you guys? What the heck? Okay, never seen that button before. It just came up to me on YouTube. So, yeah, where was I going with this? or what was I saying before? Yes, industrial stock. So a lot of these I think are interesting. I think CE, ticker symbol CE, is going to look really interesting. It actually is looking one of the most interesting between the two companies or three companies I discussed yesterday, Dow and CE, or Celines. I just can't pronounce their name. I'm liking Celines actually the most. And I know one of you out there is actually really interested in that company too. And I don't know if you're adding or not adding, but yeah, I do think that there's a lot of potential in that stock. It hasn't performed well over the past 5 years, but past performance isn't really indicator of future performance either. It's actually a mistake for us to do that. So Elemento Tamago, thank you so much for actually I'm a very bad promoter, guys. It's not like priority. But yeah, if you guys are liking this video thus far, feel free, if you so desire, to go ahead and like it. If you so desire. If you don't want to, you don't have to. But if you so desire, it's down there in the script. I can't even see how many. Oh no, I can see. Okay, we got one like. There we go. I convinced one of you to like it. All right, so got to add the strongman's TTF's short positions. Oh, you're adding that. I thought you were adding a short position. I was like, oh, okay. But yeah, so there's a lot of interesting stuff. I'm actually already filmed the first video within the free Capital Mindset course, episode 1, because some of you have been waiting for that for a long time. And again, episode 1 is going to be very beginner-like, and it's supposed to, over time, build and build and build, eventually getting to more advanced topics. But episode 1 has been recorded. It will release tomorrow. For those of you who are more experienced in the market, it's going to be quite, I guess, disappointing to you. But it's supposed to be that if it finds value, anyone can find it over time. It sits within its own playlist on Capital Mindset. It's going to be hosted on Capital Mindset's YouTube channel. And yeah, over time, the playlist will get bigger and bigger and bigger. And then, it would be a place that if you know someone who's just getting into the markets, if I provide good value, you can just go ahead and just send them the playlist. And there you go. They should, hopefully, if I do a good job, be kind of well introduced into it. So, yeah, something. Oh, message. Oh, I thought it said message restricted. I was like, oh no, we're not in that kind of live stream where I restrict people's message. By the way, this is garbage, Jeremy. What is this garbage? Oh, sorry. I was addressing questions, about what's going on right now. I'm not actually talking about him anymore. Oh gosh. Okay, so allow free people to post pics in Discord. Okay. I mean, the thing is with that, I want to be careful with actually, allowing anything to be posted. It's actually more of a hold on that. But yeah, okay. Thank you for the feedback there. Thank you. Thank you as well. So let's actually, I guess we can discuss some of these other things that we're kind of seeing. So Goldman Sachs actually came out today, and I'll actually pull up the story here. So Goldman Sachs just came with a GDP forecast for second quarter, blah, 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 blah. Basically, they lowered their forecast estimates. So they're kind of just catching up to the game here. And mainstream media is actually just now reporting on this. I know that, we've talked about it, us, you guys, we've been talking about this for a long time now, but they're just kind of catching up to it, or their numbers are catching up to it. Or, more than likely, their numbers were caught up, but they're just kind of like letting people know now. But or maybe they actually are just catching up. But all in all, I think that, some of the things that they are actually citing here in terms of their forecast or numbers, I think are accurate or precise. There were some other actually interesting things that I'm going to just talk to you guys about here. Let's, for example, we can look at this. For example, the yield curve actually has inverted yet again. And you can see right there at the, let me see, can you guys see? Oh, I'm blocking you guys. Oh, that's embarrassing. So you can see here at the far right corner, we've dipped again. We dipped again over here. And if I pull out for you guys over here, haha, get it, pull out. Sorry, immature joke. We can see each time that there's been an inversion, that for a certain duration period of time, it's usually indicated that there's been a recession to come. Not the exact nature or what's the cause of the recession, just that there would be one, or that the system is primed for one or set up for one. So yeah, all in all, pretty interesting stuff going on. I'm really excited to see what happens in the housing market. I also want to talk about, or segue into, let's segue into Zillow, right? Why not? So Zillow is and let me actually, let me pull up a Google Finance. So ZG stock, all right? All right, so Zillow. So Zillow is a speculative holding within the portfolio, and for the time being, it's designated to be speculative. But I'll actually discuss Redfin because I thought there was some interesting points brought up about Redfin within the Discord community, and some things I would like to kind of discuss with you guys here today, and some of the things that I don't like. So what I didn't like about Zillow back in the day was that they were in the iBuying business. I think that business is terrible, and I made videos back in the day about Zillow, close when it was like $100-ish, and in that video, I kind of expressed concerns, and my opinion was stating that, if they ever got rid of it, I'd probably be interested. And they did get rid of it, and I was interested, and now it's in the speculative part of the portfolio. So the real estate industry has a lot of room for potential disruption. There's a lot of areas or inefficiencies that can be fixed, and you can talk to anyone who works in the real estate space. There are plenty of them. And with that being said, you also have stuff like Redfin. So let's pull up Redfin. And now Redfin... there we go, RDFN. This one has performed absolutely horrendously, similar to Zillow. Okay, so, give that. And let's actually compare it to Zillow. So ZG. By the way, ZG is the voting shares. You could also just use Z, which is the non-voting shares. And you can see from this that Redfin has actually underperformed Zillow Group over the past 5 years. Now, some people might see this as an opportunity, and you say, okay, well, they're pretty correlated to some degree. Not to some degree. I mean, look at the charts here. They're very correlated. But Redfin has a different strategy versus Zillow. To my knowledge, Redfin still does the iBuying business. And, someone can correct me if I'm wrong on that, and I'll, redact that. But to my understanding, they still are in the iBuying business. And I don't like that. I hate that. I just hate the iBuying business. I don't think that they even belong in there. But if they're going from the approach of kind of hiring and doing everything directly with them, with employees, et cetera, they don't have those commission real estate professionals. Instead, they have salaried real estate professionals and et cetera. And they're trying to kind of vertically integrate the process together. And I know that a lot of people think that that's one way to go about it. Zillow is kind of is more of a platform of sorts. There's a lot of potential that Zillow can do, and if I see them move in that direction, that they start to disrupt, for example, the appraisal space. Appraisals is actually one that there's a lot of inefficiencies to be had. There's some micro cap companies that are trying to do their own way of fixing the appraisal businesses, but none of them are really breaking ground that's making me super excited where I'm saying, wow, okay, that's the one I'm going to be buying. I'm going to make a killing off of this one. There's some that are interesting, and some of you have actually requested them. I'm just hesitant to even cover them too much because of their size, but there are some that exist out there, and I think that if they succeed in that space, there's a lot of money to be made. Zillow again has that just potential, and when I keep using the word potential for a reason, because that's actually what defines it as a speculative versus something that would be a core. If I see a bunch of not perfect but good execution on the part of management, then of course my opinion is subject to change in terms of its allocation from speculative to core. I'm not going to box something in, and I'm not someone who's not about change. I'm all about change. So, thank goodness you're asking about Rocket. So I see someone's asking about Rockets, and so I'll briefly talk about Rocket Mortgage. So with Rocket Mortgage, and I see someone else's questions. Don't worry, I will address your questions in just a second. But I just want to address Rocket because it's within the theme. So Rocket, I think their ticker is at RKT. So RKT would have been an absolutely horrendous asset to own, especially during the liquidity crunch. Which again, it won't really bore anyone on that. But let's actually remove these other ones because I don't really care. Let's just focus on Rocket companies here. And so if you look at Rocket Mortgage from the perspective of let's say January 2021, during kind of like the peak of this, speculative bubble, they were, high flying. And even at one point, I don't know if it shows, was this the day? There was a day way back when they just absolutely jumped all of a sudden. And there was actually a misunderstanding, and I think Meet Kevin, we were speaking about Meet Kevin earlier, but there was actually a misunderstanding in terms of its short percentage float because of the structure that Rocket is. And Rocket is inherently a very difficult business to kind of wrap one's head around initially, or the structure can be very puzzling. And already from there, it's pretty concerning to me. With that being said, what is that structure? It's a VIE. So we've talked about Chinese VIEs in a negative light, but a VIE is an umbrella term. It's not necessarily a one-size-fits-all approach. It's a form or way of structuring a business, and basically VIE, variable interest entity, can show itself up in many ways. So again, there's plenty of content on the Capital Mindset channel about Chinese VIEs. There's even some on American VIEs, but there could be more, and I want to do more. One of them that I've been meaning to do has been Dutch Bros. Dutch Bros, another VIE. But just think VIE a little bit more complicated. You're going to have to do a little bit more homework to see if you're comfortable with the structure. So rocket companies as a whole, you're buying, I think it's A shares, and then there's D shares, which are owned by Rock Holdings, which is owned by Dan Gilbert. And so that's off the top of my head from what I remember. But anyways, for this company, I mean, they have a lot of different brands that they own, and they have it under, again, a VIE ownership structure. And with that being said, you do stand to benefit economically from it. But as far as the business goes, you're going to see not so stellar performance in a slowing growth environment for lending. So lending growth is declining. And there is actually a bit of interest part that some people may not know, but some people do know. I know some of you do actually know this, that banks are not the primary lenders in the mortgage market. It's actually a lot of these mortgage makers, like, for example, Rocket Holdings. But one thing I kind of want to also show you guys, because you guys should also pay attention to this company. So UWMC. So, just be aware of its existence and kind of compare the businesses. Now, this one I think has performed maybe worse than Rocket. So let's actually do the comparison. And you see, these are all free tools that we can use to compare two companies. So let's go over since like their IPO. It's not going to be perfect because technically Rocket Holdings or Rocket Company has been out there for longer, but we can see that UWM has actually outperformed Rocket Holdings by a decent margin. So, but again, not a perfect comparison there. So one thing that we can note about UWM Holdings is that it has about a 10.39% dividend yield. Appears cheap on just a preliminary look on a PE ratio of 6.93, which is a discount relative to the market. But remember, that discount's probably warranted. So you want to make sure that lending growth is going to happen. That's the bullish case for these companies. If you don't see lending growth happening, well, where's the growth going to come from? That's the question. You're not going to really see much. Now, I'll say this again, and I keep repeating myself because I really, really, really want to be on record saying it. And I could be wrong, and if I'm wrong, whatever. But this is kind of for fun and not necessarily for fun, because I'm trying to actually do something about it. But I think from the Wells Fargo report, which Wells Fargo is the biggest lender institution of the banks that gives us the best insight into the mortgage market, into lending growth in that market. And when they reported, they actually were talking about how lending growth is declining drastically and rates were rising. So people think rising rates equals more money for banks, rising rates equals more money for mortgage companies. No, get that out of your mind. It is lending growth with a mixture of rates. So if rates rise and there's the appetite to borrow, then that's a good thing. So we didn't have that appetite to borrow, it seems. So that's actually bad for a lot of these companies. Otherwise, you would say, okay, these guys give out mortgages. They should be doing great right now. No. Shame on you. That's not the case. And in fact, what they actually saw was just declining mortgages. So what we should see is that about 6 months to a year from that report, we should probably see, because it takes some time to actually weave through the market, there should be some slowdown of sorts. And you probably will experience it. Different parts of the country will experience it faster than other parts of the country. Depending on your individual market, you might experiencing it a little bit differently because you have different actors and players within that market. So yes. And okay, so we have I'm going to get to the other comments because we got some super chats, and thank you guys so much for the super chats. Okay, so let's actually go with capital K. Great stream, Fabio. Enjoying the info and the chat. Well, thank you so much for the super chat. I'm glad you're enjoying the content. I really do. And, as always, anyone can ask your questions. And we're having fun here. I hope we're having fun here. All right, so Elon Tusk. I love the name, by the way. Thank you for providing the best finance. Oh, thank you. That makes me feel really good. All right. So let's actually go up onto some of these questions up here because I did not. Okay, so Julius Caesar, you might actually buy some shares of CE, right? I actually like CE. So of the companies that I did cover, I thought it was pretty good. And take a look at SRG. Is that Seritage Growth Properties? I have covered them in the past. My opinion was not very positive. And Yeah, this is SRG, Seritage Growth Properties. What the heck happened today? Okay, so what the heck? So back when I covered them, I believe it was at the beginning of the year, somewhere around there. So it is still below the price point which I covered it, but they're getting bought out or something. That must be what's going on. Unless this is a fluke. Is this a fluke where they're up 59% after hours? That's absolutely insane. All right, so let's see. Any news? Okay, so no news, I guess. Let's actually just do this. Okay, so let's go here. Seritage Growth Properties, news. Shareholders incur further loss declines. No. Nothing happened. Follows preliminary proxy materials. It's only 2 hours ago. What happened today? There's something must have happened today. There's no way it just jumped, like that and nothing happened. They're being liquidated. Okay, so finally, they're done. Oh, get away, Norton. I hate Norton. I'm going to uninstall Norton. It is so annoying. It comes with the computer, and it's so freaking annoying. And it just keeps coming up. It's like, you want to renew your license? Like, no, never. Okay, so they're being liquidated for, I guess, the value that's below. So I'd have to take a look again because I know that their properties are meh in terms of like their overall value in reality. But yes. So yeah, wow, 59% in a single after hour. So the real winners were the ones who invested in the past, month or so. Because when I looked at it back when it was a lot higher, it was a far, far different kind of, prospectus, right? And it's still below that, but I don't know what their total liquidation value would be. I think everything, and I got just a question, but then I'll come back to these other questions. I see someone ask, why is everything so green today? Well, I think a lot of the economic data came out a lot more positive than expected, even though we did have, some Federal Reserve officials actually come out and say, well, we're gonna actually back the raising of interest rates. That's actually a good thing. And so the market's kind of maybe juggling whether or not that is a good thing or a bad thing, but, we'll see because I don't really know what specifically, and we're all just having fun and guessing what caused the markets to go up today. In reality, it should kind of make you a little bit sad if you're trying to build that position. I got a really spicy question. Just wait on that answer because you asked me about Voyager bankruptcy. Okay, so I will answer that question. Don't you worry. So, what is your opinion on loan companies as the environment? Companies like, okay, so exactly. So this actually is a really good segue based on what I was just talking about. So my opinion basically on loan companies is basically simply that in a liquidity crunch, those are the last things you do want to own because you're going to be in a higher yield environment, which doesn't necessarily bode well, not necessarily bode well for you because what you do have to kind of factor in on the other end is there the appetite for those higher rates? And for you have to worry about it because of your cost of capital. So let's actually look up Maine. I actually covered Maine in a recent video, and it was titled something about like monthly dividend payers, by the way. I love your feedback, by the way, on my titles. Are they okay? Are they as informative? I know that, there's always room for improvement, and I'm trying to, make the content as easy to identify as possible, and try not to be clickbaity, all right? But even though clickbait does sell, so. Main Street Capital is one of these monthly dividend payers, and actually more recently it did actually pop. So let's see here. It actually did pop from 15%. This company, I think over the long period of time, let's see actually if it's done well. But this is actually not including dividends, which is unfortunate because I can't include dividends here with Google. But I think in a capital appreciation standpoint, let's see how they've fared. Oh, no. Okay, let's just do the 5-year. So over the past 5 years, the company has actually underperformed the overall market. But I think maybe, I can't tell if because we can't really do that, unfortunately. Because Google doesn't have that feature, which sucks. But you know what? If I keep complaining about it, might as well do something to fix it. So I'm going to add that as a feature on the website because that has to be a thing. Because I want to do that. I want to always do that, which is annoying to me. I want to have a customizable performance measure, in a line chart. But anyways, with Main Street Capital, a lot of these other companies, they will struggle. But Main Street is supposed to be the best of the BDCs. There are a lot of other BDCs that aren't as well managed as Main Street. And that being said, Main Street still has underperformed. In general, Main Street Capital or any other BDCs, they're very difficult businesses at the end of the day. So there's a lot of factors you got to be careful of. Not simply just go, oh, let's go and buy this BDC because the dividend's nice. But yeah, and I think the other one is that one a BDC or is that one that might be a mortgage REIT? AFCG. Oh, wrong one. AFCG. Is this a BDC? I always forget. Yeah, dividend yield of 14.3. This is either a mortgage REIT or pretty easy to find out if we just do this. Leading provider institutional loans. Okay, so cannabis loans. Okay, makes sense. So it probably is a mortgage REIT. Yep, it is a mortgage REIT. So mortgage REITs, I don't really care for personally. Over long periods of time, I think that mortgage REITs are going to underperform. They don't have hard assets. I did discuss this in one of the REIT videos, but the differences between equity REITs and mortgage REITs. But yes. Okay, so there was a question that I see. Where did it go? Strongman's TTCF short position. By the way, love the name. What are my thoughts? Okay, what are my thoughts specifically on Voyager Digital bankruptcy? Well, one, we discussed it a lot regarding, for example, the risk that there would be one. And we talked about specifically under the context of counterparty risk. And counterparty risk is the risk that you kind of don't account for when dealing with an individual. So you're dealing with me, but I'm dealing with Bob. And then so you have to worry about Bob as well because Bob is like that counterparty risk. I'm oversimplifying the example. And I remember in that video, some of them were a little bit testy and they got deleted, but they deleted their comments. And then some of them did not. And I went over that in some of the older videos about that. So kudos to the ones that, by the way, didn't delete their comments because, I was respectful, or I try to be respectful. I felt I was respectful. And I just basically wanted to discuss or just show that a lot of them were saying, oh, well, that's never going to happen. Oh, they're never going to lock up my money. I've never had problems, liquidating my money. Well, now, that was kind of like jinxing it a little bit. But that person, I feel bad for them. I truly do. But yes, it was something that could have easily been spotted a long time ago. And there were a lot of people who did spot it a long time ago. You didn't have to actually even wait to see those videos to kind of understand the risks that were going on underneath everything. Because at the end of the day, they were just lending out like crazy into these, well, let's face it, a speculative asset. And then you have all that counterparty risk built in with all these funds maybe borrowing money from you, or in this case, cryptocurrency. And then, oops, I lost your money. Oops, poof, and it's gone. The South Park meme, and it's gone, right? That's basically what happened. So we can all appreciate that, I guess. I hope we enter recession. No, we're already in one. Do I think a recession is priced in? No, not necessarily. In some cases, yeah. In some cases, no. I think that a slowdown is priced in, but I don't necessarily think a recession is priced in all aspects. I think some industries or some markets are going to be quicker to act than others, but I don't think like a severe one's necessarily priced in. Okay, so I got a question here. Do you think this is a bear market rally? Nothing has changed in the last 2 to 3 weeks, but it was a break. Well, we've been having several bear market rallies. Okay, so little jumps here and there. And so it would be nothing new if it was one. Oh, okay. We got another super chat. So thank you for the super chat. Okay, so let's see the question here. How debt offerings work and how they different from normal debts. Okay, Yusuf. Okay, you gave me more parts, I guess, to the question. I can provide an example of a company which took a debt offering. I'm trying to understand how it all works. Of course, yes, provide the example. How are debt offerings different from conventional debts when they become due? Okay, specifically, what kind of offering are we talking about? Because I would like to actually see the specific one that you're talking about. Okay. And then I will answer your question, Yusuf. I'll be watching out. Okay, so SDC, so Smile Direct Club. So you're talking about Smile Direct Club. Okay, so Smile Direct Club. They took a debt offering of $750 million, which is due in 2026. Okay, so what? Okay, so I'm trying to gauge your question, Yusuf. So you're asking, how is this different from what do you mean by traditional or normal debts? Help me out with the question here, so I understand how best to answer it. And then while I see, I won't bring anyone else's comments up because I'm not going to forget about your comment. I'll just read someone else's comment and try to answer it if it's a quick, easy answer. What are my thoughts on Micron? I mean, Micron's actually getting, I got to be honest. I mean, it's a super investor stock. It's pretty interesting. It was once upon a time far more commoditized than it is today. It's one of the largest players in that industry. But all in all, like, are there better quote unquote semiconductor plays out there? Yes, but are they as cheap as Micron? No. But yeah, I'd say that I had a video on Micron. I'd have to revisit my thoughts on it and see what I thought back then. But I presume that I didn't really, I think I remember correctly, I didn't really like the price all that much. But it is coming down. So I might have to revisit what my prices were back then. And then maybe I do an updated analysis on it. I've been actually getting a lot of requests to do an updated analysis on Crocs. Crocs is one that's been asked about quite often, believe it or not. So... and then I have some other questions like, Fabio, what do you think about equity research as a career? So yeah, I think it's a really good career. I mean, are you trying to get into investment banking? If you are, there's a lot of ways to break into that. But yeah, no, it could be good. What is an example of a company that took it? Okay, so, but yeah, Yusuf, specifically, what do you mean by the differences? And I'll be happy to answer the question. Like, what do you like kind of gauging? What do you notice? What do you mean by different? Like, you mean from long-term debt, short-term debt, and then, okay, they issued a debt offering. Is it a convertible, notes, etc.? What do you think about Everything Money and Jeremy going to start posting diss track videos? Yeah. So I was discussing about that earlier. I gave my thoughts on the whole drama. And so I think that, I've given Everything Money the criticism where criticism is due, and I'm going to give them credit where credit is due. Okay, Yusuf, I got you. So you'll explain in a moment. All right. So I think that Everything Money has its problems in terms of like sometimes when they do analysis, but when they're going after Jeremy, they're going after the context of, Jeremy. So, let's see. I'll be happy to see how it kind of plays out. I'm this micro channel, I'm the bottom feeder at the bottom, kind of just, surviving, thriving off of their nutrients. I'm just kidding. But yeah. Okay, so let's see here, some other comments. Can you take a quick look at Slovakia? By the way, I'm not removing Yusuf's because I'm waiting for the other stuff, but I'm addressing other comments. But can I take a look at Solvay? It is a boring chemical business in Belgium. Okay, so I actually have a dedicated video to a lot of these German, European chemical producers that's going to come out. What I'm going to do is I'm actually going to put that on the list when that video comes out, because I'm trying to cover a lot of industrial players, because I do think, for example, I don't care that they don't get a lot of views. YouTube doesn't really care for these very boring companies that no one hears about. So, for example, I think in the past months or so, my 2 worst performing videos came out today. I think this live stream is performing better than those videos. And well, it's because those videos are about companies that no one really actually cares about. So, but that's not really the goal of this YouTube channel. It's to provide this content and build a backlog of all of these companies that I've discussed in the past, and build this catalog up from the ground up. And just have those thoughts out there. And I just want to do that. So I'm going to do that and add it to the European chemical manufacturers. So I'm going to make sure that is included. So let me see. Let me write them down again. Where are you at? Okay, here we go. Solvay. All right, Solvay. And then this will go with the other European chemical manufacturers, because I discussed that in today's video about the American chemical manufacturers, that they have an advantage over the short to medium term because of energy prices. If you look at LNG prices in Europe, they're actually still rising, and that's a bit of a problem on the at least case for the margins for these companies. And then there's also the political risk that I was actually discussing with some of you outstanding gentlemen in the Discord who are European, because a lot of the capital mindset community is actually European, by the way. So yes. Okay, so I have a okay, so I'm going to get to Yusuf's question, and then we're going to end it here with the Yusuf's question. Not end this live stream, but finish off Yusuf's question well. Okay, so base deal 650 million in green shoe, exercise 9.7 million coupon, 0% conversion, premium price 40%. Premium price of 40%. Okay, so coupon 0% conversion, premium price, coupon settlement date February 9, 21, maturity 2020. So they have to pay back in 2026. And then what did they receive? So 6% shoe exercise 7 million. Oh my gosh, they're getting shafted here. My understanding is that it's not like normal debt. The lender, yep. Yeah, they're not getting conventional form of debt because and this is SDC, so it actually makes a lot of sense. So when you're a distressed company, you're not going to be able to negotiate for the best kind of debt. So just like, just regular old non-collateralized bonds or et cetera, stuff like that. So with SDC, if I actually pull them up, which I think they deserve to be pulled up, because this is the next one that actually might end up going bankrupt. Who knows? They're at $1 now. If I pull up their financials, I can probably see that they're heavily distressed. So if the company is heavily distressed and lenders know that they're heavily distressed, they're going to need to actually take care of themselves first, right? Because the lender is going to not lend to you in an unfavorable term. They're always going to try to protect themselves to some fashion. And if the market knows, and this is part about being a publicly traded entity, the market very much well knows that you're struggling. And one of those things that actually does influence your credibility in terms of getting lending is your stock price, because stock price actually is in a huge sense optionality for the business, because when you try to issue capital, well, stock is an uncontingent form of raising capital. What I mean by that is there's no one you have to pay at the end of the day, but debt is a form of contingent or contractual agreements that have time stipulations, right? So for example, in this instance, you have a time stipulation of 2026. So you have to pay certain time periods. Okay, with shares you don't, right? But you are giving up future equity in the business. So Smile Direct Club, as you're kind of pointing out, and you're even realizing it yourself, they're getting kind of a shorter end of the stick kind of lending deal because they don't really have any options left, right? If they issue shares right now, that's debt. What is it called? Death spiral financing, I think is the word for it. So death spiral financing. When a company, when it gets to these microcap levels, it keeps issuing shares in order to survive because no one will lend to them. Well, Smile Direct Club has found a lender that's willing to do it at certain terms. And so, you want to analyze the terms. If you're yourself, equity death spiral. If you yourself are identifying that these are not favorable terms, well, consider that as something that, the lender is kind of identifying that there's a risk here. Maybe I should also consider that there's a major risk here as well. So I think very kudos to you that you've done that, by the way. I think that a lot of investors should actually take a look at some of the debt offerings by a lot of these companies, because in a way, it does give us a different type of glimpse into the overall health of a company, right? The lender is going to do their own due diligence, and we can kind of infer from the health of the company by what the lender is saying, okay? And, just so you understand, the lender itself, when companies perform lending actions to one another, or banks, let's say, or lending institutions, there's audits that are going on. Okay, so you don't just walk in and say, I want a loan. Okay, here's your loan. No, there has to be some form of audits that go on, and then so the lender feels comfortable with what the statements based off of that company are true. And I'm talking about in a broad sense of all companies. So these numbers for sure are audited. So the lender has looked at these numbers and said, okay, well, this is the loan we're willing to give you, and if the terms are unfavorable, what does that tell you, right? Hopefully that answers the question. But no, you've identified a lot of the key risks. You even yourself, in the way you're wording some of your explanation, you've already identified that this loan is a questionable, to say the least. And under the context that it's Smile Direct Club, I mean, had you shown me and not told me it's Smile Direct Club, I would have been like, oh, well, that's not really, those aren't pretty good terms. But now that you gave me the context, or you gave me the context ahead of time of Smile Direct Club, we have that bias now that it's a company that has a questionable health. Because I think, I'll say, if I haven't said this yet on a live stream, I'll say it on record. This is the next one that is a huge potential risk beyond, I think, a Tattooed Chef to go BK, okay, of the ones that are here. So, all right, so let's see some more comments. But we have a nice comment from Bruh. Russ says, hi, Fabio. I've been watching you for about 8 months now, and you are by far the best investing YouTuber, unlike everyone else. You teach people. Oh, thank you so much. It's not actually showing your full comment here. There we go. Thank you so much. That makes me feel good inside. Okay. And then you also said you teach people how to analyze the nuance in businesses. Thank you for all. Thank you so much, bro. That's a very nice comment. I appreciate the comment. I appreciate the nice words. You have paid me with heartfelt warmth and comfort. So you can only pick one semi stock right now: Intel, Micron, AMAT, LRCX. Which do you pick? Oh gosh, only one. So if I'm being honest, I'd go for a picks and shovels play because you're really kind of narrowing me down there. So I'd pick one of either Applied Materials, LCRX. You're putting me on the spot here, so I'm going to have to just pick randomly Lam Research, not because I think it's better than Applied Materials. I'd have to do analysis on which one's better. But if I only had to pick one, I would say in terms of the theme, I'd pick the picks and shovels play, not necessarily a specific one. Micron, while, good company, probably better valuation overall, I'd rather prefer one of the picks and shovels, so to speak. Okay, so why? What do you mean XRP? Are you talking about, is XRP like a crypto? Wait, hold on. I don't remember what XRP is. Yeah, XRP. What is this? What is this? Oh, yeah, it is a cryptocurrency. I mean, I don't even know all the cryptocurrencies, man. All right. What's going on with XRP? All right, so, okay, so it's down on its luck. I mean, all right, price prediction. XRP will hit 10. No, I'm kidding. I don't know. Austin, for you change your name, Austin. I notice things, okay? I remember. I have a good memory. So investing banking as a career, like a research analyst, too stressful with lots of work hours, ? Yeah, I would agree. So I'd say yes. And so I am sure it's different from firm to firm, though, yes. So I have actually a couple of friends who are actually working in the industry as investment or as analysts. And yes, it is very stressful, and it can be a lot of work hours. So yes. And by the way, the pay, depending on where you live, is high, but also the cost of living. You have to factor that in. So yes. And so, but yeah, I'm actually seeing your other part. I didn't actually see that it was you said this, but so you've already identified it's convertible debt. So yeah, they're basically getting the short end of the stick here. Okay. So, this is, hold on, this is the unfortunate thing. So I'm going to get to your guys' comments. Let me actually just auto-correct this silly thing, because let me do this, and then docs, and then chat. Okay, so then let me actually do this, custom browser docs. I always have to do this now and again. So that's the one thing about, setting this up with tape and faith. You got to actually sometimes reset this chat feature. Otherwise, it doesn't work all the time. Unfortunately, that's just how it is. All right, so. Okay. Interesting. It still hasn't fixed. What the heck? All right, so hold on. Give me just this quick second, guys. Let me actually go with that. Let me make sure I copy. Let me delete that. Apply, close, docs, custom docs. Let's call it chat. Let's import this file. Let's reset. Apply. Okay, so it's just actually just saying, no, I'm not going to work. All right, so let's actually do this instead. So let's stop, start, and just reset the link. And the link part should work. All right, so let's copy that, and let's set that up. Let's go. Boom. All right, it worked. See, we can do it eventually. All right, so going back to this, close. All right, we are back. Sorry about that. Just had to quickly do some sort of correction there, but we are back now. Okay, so let's go back to the questions. Convertible debt offering. No. Well, we'll make some. Okay, so I'm just kind of catching up here. If a company is a stressed lender, will acquire very high interest. Yeah, you see, Andrew Austin's actually adding to the conversation there. He's absolutely correct. Okay, that's general rule of thumb. I mean, more or less a good general rule of thumb. So is Google one of the best recession-proof stocks because people will still use YouTube, Google Chrome, and phones despite? Well, we have to consider where is advertising spend going to go, right? Is advertising spend going to remain the same, decline a little bit, remain rather stable? That's kind of like more the question where I'd kind of push you in that direction. I'd say, okay, focus more on that. But yes. Equity death spiral, so I already read that one. Sounds like a punk bank. Yes, this is the whole reason why they do exist, right? To perform those audits. Of course, no, you're welcome. I'm glad to be of help. So capital mindset, are there any industries or sectors where you find all stocks trade about the same way, so you would rather own an ETF than that is a very good question. So where all stocks trade the same. I would say that we're talking about sector ETFs. I like to use sector ETFs more so when I believe that there's like a place on a specific strategy. And so actually that's one of the things that I talk about in episode 1 of the course that will be released tomorrow that I've been talking about. By the way, in order to watch the course, you have to pay me a grift fee of about $50,000. So if you pay me $50,000, you can watch the course. If you can't tell, I'm joking. Okay, just some people won't get that it's a joke, but so I have to say it's a joke. But anyways, I do talk about that as how some indexes or some ETFs more specifically are following different strategies. I would say that I would use those if I believe that there's a specific strategy I want to follow, but I don't want to have the individual stock risk. So let's say, for example, I want exposure to airlines for whatever reason. I'm like, okay, that's the one I want to do because I think, travel's going to go up, gas prices are going to go down, all this jazz, all this goodness, right? And so I'm going to say, okay, well, I don't know if I pick American Airlines, which is the most leveraged one. In theory, let's say I don't know this, but in theory, I know that if I can identify that American Airlines will survive, since they're the most leveraged, since they're the most, messed up, so to speak, they should benefit the most, right? So because I'm taking on a greater amount of risk and the market's more pessimistic on American Airlines than some of the other ones. Okay, so then I can take on that, individualized bet, so to speak. Okay, so let's say I do that, and then I mess up. Well, if I don't want to do that, but I still want to, I play this game. I play the investment, the idea. Then in that case, well, yeah, I'd probably take the index regarding airlines. Which, by the way, I should probably change this because I have a cryptocurrency, and people who are new to the channel come in and say, "Oh, this is a cryptocurrency channel." What is the what is the index that I'm looking for? I think it's called Fly, or is it not? No, it's not called Fly. Jet. I think it's called Jets. Yes, it's Jets. So Jets, this is like one. So this is following this specific strategy, and you're gonna pay a higher expense ratio. So you got to remember that. But yeah. So that's basically where I would use these. Okay, so ETF individual stocks. Any healthcare companies on your radar? Well, in terms of healthcare companies, I do actually think that a lot of the insurance ones are interesting, not interesting plays, but very good companies. There's also the added kind of thoughts, okay, well, what happens? Well, I'll save that for another video. That's actually, but not necessarily. Maybe a pharmaceutical company that might be of interest. Might be. I have to take a look at AbbVie. I still have to do the video on AbbVie. That's been requested for so many years. Not so many years. Sorry, months. We haven't been live for that long. But yeah, AbbVie is the one that I'd actually want to do a video on because it's a position within the portfolio. I would like to actually evaluate whether or not I want to add more to it or just keep it where it is and just harvest the dividends from it. As far as ones that are screaming to me, healthcare, no, there's not really any that are screaming to me. Healthcare, there was Bristol Myers Squibb, which actually performed well. It was a stock that we talked about in the channel. I used to actually own it. I sold it to buy something else, and when I sold it in the video, my ex-co-host Austin, he actually was going to keep the holding, and I explained I'm not selling it because it's a bad business. And in fact, I think it will perform well, and it did perform well. I just wanted, and there's a million reasons why an investor would sell, so it's not necessarily because of that. So Bristol Myers Squibb at the time was good, and that was recorded. That video I know was recorded at the tail end of 2021. There was also I invested in Cardinal Health, which was another one. Trying to think of, there was not really any ones. I recently purchased a small position in Medical Properties Trust, but that's a REIT. So yeah, not really any like that. Okay. We do have a new holdings. Checked me as a good value under $150. So NU. So let me look at that NU. So NU. Is this Nubank? You're talking about Nubank? No, you're not probably talking about Nubank. You're probably talking about Nucor, something like that. So New Holdings. Okay, so let's go New Holdings. Is it? No, it is NU. Yeah, it is NU. Okay, so because you confused me with the $150. I was like, what? Where's the $150? Because I know New Holdings is not $150. So are you referring to in reais or reals? Sorry, Brazilian reals. I said it how the Brazilians say it. All right. What the heck is going on? There is drama building up. Oh, I can tell you guys that. Oh my gosh. But I cannot tell you what it is. Oh no. Oh no. Okay, so sorry. Yeah, you guys are gonna be treated for something later down the road. I can tell you guys that. So keep an eye out on YouTube stuff. All right. Capital mindset is technical analysis, astrology, investing. Well, no, it's based off of behavioral finance, and it works a lot because there's a lot of human interaction within the market, and the more people believe in it, the more it actually works, which is the funny thing. Okay, Julius Caesar, thank you for your $50,000 donation. You are allowed to watch tomorrow's video. Everyone else is not allowed to watch the video. You're just not allowed to, unless you donate right now $40,000 to $50,000. He donated $50,000, so he paid for someone else's by about $10,000. So someone only has to pay $30,000 to actually watch the videos. Again, if anyone's new, I'm obviously joking. I have to say that because, can you take a look at OSTK? OSTK, I have videos on the channel about it. So OSTK is a speculative holding within the portfolio. It has a core business that I do like, that being, the furniture business that they have. And it's performed abysmally over the past year. I mean, it's down 68.26%. We did not get it at these prices because that would have been ridiculous. But I am accumulating here and there, but it's a speculative holding, and that's where it remains. And the reason is because I do not invest for it for the core business. So under that understanding, that's kind of like my rule of thumb. I'm not going to make it a core holding because of that. I'm literally only investing in it for its alternative assets that it owns and the prospects that it might have as almost a utilitarian perspective on blockchain. Not so much on, oh, look at my NFT, bro. This not for that reason. Okay, so I saw someone said they're going to donate in Dogecoin. I accept Dogecoin. You can donate in whatever currency you want. You can donate in Zimbabwe dollars. You can donate in whatever it is you want, as long as the unit amount is 30,000, right? You can give me 30,000 rocks, and I'd be fine. That's fine. Oh, okay. So each episode will vary in length. It's not necessarily like there's no set amount. I'm just getting it out there because I promised to many of you that I would make it for you guys, and things got really busy, and I don't want to produce garbage out there. I want to eventually curate the course over time and try as my best to provide value. So I think tomorrow's episode is about 48 minutes long, something like that. 48 minutes long, and it's going over a lot of the basics. So it's starting off basic because that's the idea. Episode 1 is basic. Episode 2 is building upon episode 1. Episode 3 and so on and so forth, right? So that's the idea. And then it's all going to be in one playlist. So it's hosted on YouTube. That's the easiest way to have it there. And so I'm officially a grifter because I have a course. Which, by the way, I didn't even know I had a course. Apparently I found out that I had a course like 2 weeks ago. Because someone actually said that I had a course. So I was like, oh, I didn't even know I had a course. But now I actually do have one, okay? And it's a total grifter course. And I'm literally just throwing a thumbnail on it. You know, if it gets views, it gets views. If it doesn't get views, it doesn't get views. It has like a really basic thumbnail, and it's just titled like course episode number 1. And that's going to be like just part of the playlist. So if someone checks on it, they can just click on the playlist and go through the videos and stuff like that. So that's how it's going to be. Yes, Jets. Okay, so you actually pointed it out. Okay. Okay, if people really want me to get into this, people can ask. But I got one taker in terms of me getting into that. But do I really have to? I mean, almost like just want to say like no comment. but if you guys really want me to talk about it, I'll talk about it. CVS, my EVS. Oh yeah. I mean, well, we just talked about Walgreens. CVS owns an insurance company now, so it's correlated, but not directly correlated to Walgreens anymore. Turns out that was a good move, whether or not management knew exactly that or not. All right. So, do you have any thoughts on day trading, scalping, or utilizing resistance, support, charting? Yeah. So no. So. In terms of making, resistance, support, identification, that's good for optimization of entry points, exit points, etc. All well and good. All good on that. Day trading for me, I would only do that by accident. For me personally, so yeah, I'm not really like a fan of it. I'm pretty much a laid back investor. A lot of my success has been primarily in that kind of lazy approach, buy and hold. And don't sell for very long periods of time, let it run. And I've learned more often than not that playing with the SOAP actually ends up harming performance more often than not. But, for example, with oil stocks, we did really well on that one so far. I don't want to jinx it, but we did really, really well. We exited at a really, really good time and entered at a really, really good time. And it was based off of sound thesis, in my opinion. I didn't get out at the top. No, but I don't really care too much about that, right? So I got out at a really good price that I'm very satisfied with. And that's kind of what I focus on with that. Could I have gotten out at a better price? Absolutely. But yeah, you can use that. Oh, and options. I do use options a lot. I don't share options at all with the community in terms of like, for example, the portfolio. For example, I think, Paul said that with options, probably his performance has been better because he does a lot of options trades. I actually, in my disclosures, even when I'm using this third-party source that I'm actually going to be using from now, well, I haven't used it yet, but I'm still uploading some other brokerages. And once that's ready to go, I'm going to be using their service because it makes it a little bit easier for me. It updates a lot quicker, because it's not built like on the back roads or something like that. You know what I mean? That the sheet is actually built on. But so it's able to integrate a lot better, and I can actually customize the viewing point, so I can still have that customizability. But one thing it won't still include is options, which is good. What it still will include now, which is I still also didn't include alternative assets. So, for example, TTT, I didn't include that because of just responsibility. I don't want to like encourage or show anyone things that they really should not be messing with because that's a very specific kind of strategy and can be very dangerous. But unfortunately, this new third party will just show it, and because it considers it a stock, so I can't actually like. It's not as customizable in terms of, this one, don't consider it a stock, but it will consider it a stock. So it's going to show it. But, whatever. It's too bad, so sad. I'll just have to, be extra careful in disclosing to people saying, yeah, this is very dangerous. But even though you say that, people are still going to do things and still, yeah. All right, so how to fight the inefficient U.S. government service laws. Some of the fixes could be tremendous benefit to the economy. Yeah, you're pretty much not going to be able to win that fight. It's almost inherent and built into it because the incentive structure is not for efficiency. So because of that, what are you fighting? You're fighting a system that's designed or lacks the incentive structure to be efficient. So even if you make it efficient for, let's say, 5 years, in the next 5 years, who knows what happens, right? It's a natural process of life that these systems decay. That's natural. That happens. It's nature, right, so to speak. It's kind of like the rusting of metal. Governments are like the rusting of metal. Eventually, they decay. They become, shadows of their former selves. You can kind of think of it like any organization you end up starting. You think of it like, okay, you build it with whatever noble intentions you ever thought of, blah, 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 blah. If it attracts the type of entities or people that, are the least person you'd want to run it, well, they're probably going to end up running it. So So it's a natural part of the process. Drama is it something that in your group with strong and everyone? Yeah, well, maybe confirm nor deny, neither confirm nor deny. All right, we're getting some donations here. Oh yes, this grift money. Oh yes, I'll go in on 30K. Oh my gosh. Oh yes, I'm getting so rich. All right, capital mindset. When did you start investing, and what got you into it? So when I started investing was definitely when I had my own account was when I turned 18 years old. So, that's been a while now. In terms of actual investing, there's been, for example, just like custodian accounts where I got exposure to it. But what really got me exposure was actually in my childhood. There was a friend of mine who his parents had a massive portfolio, and that was built over generations. And the two parents were actually both surgeons, and but they were showing me the portfolio they built over time. And actually, this was a generational portfolio that actually came from the grandparents of the father, so the great-grandfather. And, just like, for example, I'll give you a number. The McDonald's position, just the McDonald's position was like $7 million at the time. And this was way back when. So I don't even know what that is, because I doubt they sold it, because that was actually like something that the father was kind of describing. It was the first time I learned about, for example, dividends. And he was like saying like, yeah, we make like, this is the money that comes in and from our dividends. I was like, geez, like, okay, that's basically like, ownership in McDonald's. And then he was kind of explaining it to me as you would a child, right? Oh, I own a piece of this company. Every time you go to McDonald's and you buy McDonald's, I generate a piece of the profits, or I own a piece of the profits. So it was kind of explained to me, and it was really like in a fascinating way. And then almost like, oh, it's like a kind of like, for a child, I guess you can kind of think of it like it's like a game of sorts, right? Collection game, right? I'm going to collect these stocks over time. So yeah, it's good times. Yes, it has dropped a ton, but almost kind of like deservedly so with everything that's going on in terms of sentiment in the semiconductor sector. It was really priced expensively, if I'm being honest, but it's going to be priced expensively because the market itself identifies it as a good company as well. Okay, what is this text I'm getting? Okay, who are you? Okay, I know who you are. But yeah, I can do a video on them. Okay, there we go. Oh, yes, more donations. Keep the donations coming. Capital Mindset, saw Corning video, and it's a good company. Many people I know work for. Yeah. So the market, like I said, identifies that is a good company, and that's why it trades typically at a premium. Comms company looks like it could have a lot of debt, but I like their products. Thoughts on Com? Well, if they have a lot of debt, did they do any acquisitions? That's going to be like my follow-up question to you. Were there a lot of acquisitions, and if so, we'd have to kind of break down those acquisitions. Are they going to be accretive? Were they accretive? If they were in the past. For example, CE is doing an acquisition on DuPont's business model, but the business that they're buying from DuPont is actually very accretive to the actual business. It's basically in line with what they do. They have a lot of experience in that line of businesses. So I like it. When I actually took a look at it, learned a little bit more about it, I do actually like it. So yeah, that's kind of like the context that I would actually look into Com if they have a lot of debt. Thoughts on Martin Shkreli? I have no opinions on Martin Shkreli. I don't even really know much. I don't know anything about him. I can't really... Oh, there we go. 300,000. So he's beaten all of you. I've gotten the most from him. 300,000 Voyager Digital shares. Okay, those are worth about what? $0? Capital Mindset. I know now's not the time, but when you buy oil, do you opt for E&P, refinery, integrated plays? What in particular? Just curious. Okay, very good question. So with oil, because I would not say that, I guess, I would prefer to get the full enchilada, like the full thing. Because, for example, finding out the nuances or the weak points within the chain is a little bit more difficult than just picking the one that's going to benefit no matter what. But technically speaking, if you're going to refine the holding, but you're gonna have to pay attention more to it. But you're gonna refine the investment, as in pick the most optimal, then you would pick one of these three, or you'd pick a combination of sorts, because you'd be able to identify where the weaknesses lie in that chain, and then so you'd say, okay, well, this is happening in the world, and that's causing, I don't know, refiners to shut down, for whatever reason. And then so you say, okay, refiners are shutting down for whatever reason. This is going to make existing refiners more valuable. So I'm going to go with a pure refinery play. And if you're correct, that should benefit the most, and vice versa with other ones. So yeah. Late as hell, saying what's up though. Hey, what's up, JP? There we go. Okay, yeah, it keeps coming in. Okay, get into what? Now I forgot what I was supposed to get into. Fabio, what did you tell me, Julius? That was incredible. Oh, JP, I mean, it's a story, my friend. It is a story. I mean, it can be something. Who's this? Okay, I got another text message. I'm getting a text message from old clients now. Yes, it is a story. I should probably we have to do it. If you guys want to know, it'd be like a call, because it's particular to something you guys are interested in. Episode 1 tomorrow. How would you like me to send the grift money? Send it via I don't know. Send it via Voyager. No, Celsius. Send it via Celsius. Just do it that way. Or FTX sponsorships. Send it via FTX sponsorships, and we're good to go. I love who was playing so with Big Jim. Any thoughts on oil, my coil? Well, I'm out of oil. I've been out of oil for, about a month now completely, but I've exited oil big time for over a month now. You can go back in my older videos and actually see the kind of progression and evolution over time where I was, I owned oil to the point where I no longer had oil. So that's the point of YouTube. It's all documented. It's all documented and building over time and continuing to be documented up into the future forever. Okay, so yes. Options, get rich or die trying. Capital Mindset, how is your preferred way to get exposure to foreign markets like India, Brazil, etc.? Wow, very good question, because I think, for example, a lot of these countries have very different business cultures, so it makes it very difficult. I like to, if I can find, I would like to actually get the point across where I actually can, how do I say this? Get American businesses that have exposure in those jurisdictions to actually provide me with that desired exposure. Otherwise, I'm a little bit hesitant, if I'm being honest. All right, what's your worst investment in terms of losses? I actually covered this in the last one. My worst investment in terms of losses was definitely Newell Brands back in the day. That's actually one of the ones I covered, I think, in the last live stream. No, the live stream before that. But yeah, so it was Newell Brands. And Newell Brands was one. I recommend go check out that video. But if you really want to know, just ask it again and I'll kind of talk about it. Oh, yeah. So that answers 2 questions. So you know what? I'll go over Newell Brands again because I talked about it in the last live stream. But I'll be brief because a lot of people probably already heard it. So I don't want to bore them to death with just a repeat of the story. So Newell Brands is a good example. Let me actually try to see, can I go back? Yeah, this is fine enough. So eventually I won't be able to tell the story on the 5-year chart because it will be too late. So this is a good example, learn lesson that, don't follow super investors just because it's a super investor. Be careful with a falling knife. And empire building, why empire building is very bad. So this is a company that experienced all of them, all of the above. So, you have Carl Icahn getting involved around here. The stock drops a lot. This is considered, household names, et cetera, Expo, Sharpie, all that jazz, right? And so, what we have is a super investor going in. So this makes it interesting. It gets a lot of hype on media, so to speak. The company did a lot of empire building. Did not appreciate the dangers of empire building as much as I do today as I did back then. Okay, so back then I didn't appreciate it as much. And so they bought another company. I even forget the name of the company. Who cares about the name of the company? They bought a company. The company had a lot of other brands. The CEO at the time was like, heck yeah, I'm going to buy this company. I'm going to build a bigger company. I'm going to be the CEO of this bigger company. And it's all going to work out. Did not work out. And the company took on a lot of debt relative to basically what they probably should have. And yes. And so Carl Icahn takes over, falling knife, basically all in all, I think, somewhere around here is when I bought, and I sold it at a loss, right? I sold it at a loss. To date, this is probably like the largest loss in a no, not in a percentage term, because technically, remember, I re-entered Gazprom. So after I sold Gazprom, which again, it's all documented on YouTube, you can go check out the video where I had Gazprom, sold Gazprom, and rebought Gazprom, and my thoughts as to why and my evolution over time. So I repurchased Gazprom because at the time, after I sold Gazprom, it collapsed. It absolutely collapsed. So basically, I took some of the profits and I redeployed it, and I was able to repurchase all of the shares that I had sold. And so for me, I was and I stated in that video, it could very much go to zero. So technically speaking, on a percentage terms, that one was the worst one. But in dollar terms, it was very insulated because it was a very small position. And you can then follow that up by taking a look at the portfolio update videos where I go over and you can kind of see the size of Gazprom, how it changed over time throughout that time period as well. So yes, so that's there. And so in terms of percentage loss, that's technically the biggest, but this one, more so in the dollar terms, but it works out in the end. Okay, so let's see here. I'm getting so many donations. It's not even funny how rich I'm getting. Martin is killing. His analysis is refreshing in his time. Okay, maybe I should check him out. If he's like that awesome, I should check him out, because why not? Why not check him out and then see how his insight provides different value? Oh, okay. Okay, well, now I didn't get it. All right. Got 40 million chocolate coins. I don't really... Peter Lynch, great guy. Okay. And new holdings. Yeah. So, okay. So new bank holdings. My problem is it's a Brazilian bank. It's a Brazilian bank. So that's my one issue. So you have that cross-currency risk. And one thing that's actually been really heavily affecting it is actually the exposure it has to the Brazilian real relative to the dollar. So American investors are getting hurt tremendously. Brazilian investors aren't faring well too. But Brazilian investors, a lot of the wealthy ones, they invest here in the United States. So they actually have the reverse problem. They're actually doing pretty well. All right, I was thinking PayPal or Visa. PayPal or Visa regarding to what, Patrick? But okay, PayPal or Visa. I'll take Visa as a business. PayPal, though, as in terms of valuation, is better in my opinion. Definitely might end up in the portfolio. I can tell you that. We definitely need to know. All right. I mean, Julius, you might actually already know. I mean, you have access to it. Fabio, what do you think about the idea of the U.S. banning intraday trading, similar to what China does? I mean, no. I mean, whatever if people want intraday trade. No, I wouldn't be down for that. Newell, why even buying with a chart inconsistently like that? Well, no. You got to understand. So, like, yeah, when you look at it from this perspective, yes, you're absolutely right. But at the time, I was like, oh, no, they're gonna fix things, right? They're gonna fix things. A super investor, nah. So it's like a young fool's job. But that's how you learn things. That's how you can learn some things. Do you think it's feasible to get hired as a research analyst without official degree in finance? But let's say you're just taking Oswald's course. No. Probably not. I mean, unless someone is like willing to take a chance on you and they own the firm, yeah. But at like a bank or something, no, probably not. Just taking Oswath's course, yeah, no, probably not. Because the best way to do it is like to land an internship. That's how like all my friends did it. All my friends just landed internships, and you get paid while there, and yeah, I mean, and then you hopefully get hired. But then otherwise, you can try to go a different route and try to pivot into it by, going a different career path that's similar alongside it. And then you try to pivot in. And it can be hard, but because you're going into what they call career hiring. So where they hire professionals, not necessarily students anymore. So it's a little bit different there. But, yep. Gazprom ever return trading? I don't think so. I don't know. They're politics, man. Politics, Meet Kevin chatting back at Echoes. Oh, right now? Let's do an inception moment. Why not? Okay, so I have pulled it up here. Oh, let's go here. Is he still in here? Where is he at? Oh, I don't see it. It's not updating. Whatever. I just take a word that it's... Oh, there it is. What is this? Echoes lies about me daily. Suggest that I never said a firm would be poorly recession... I'm not even showing you guys. I'm so stupid. All right, so yeah, this is what he's talking about right now. This is yeah. So it's getting spicy in there. I mean, heck, yeah. I mean, Echo's channel is now going to hit the stratosphere in terms of growth for sure, because this is definitely a lot of exposure. It's something that Capital Minds has kind of refrained from doing for now. I'm not like dissing or saying anything's wrong with it, but like I know that would cause this channel to grow more because what the research has shown is that YouTube audience, and I'm not saying you guys specifically, but YouTube as a whole, the community, what grows the most is negative content. So content talking about recession, content talking about, bad things in general happening, drama, tabloid stuff. Tabloid stuff gets clicks, and then that causes growth. So, criticisms of other creators, etc., all that draws in growth. And so that's basically like the gist of it. Yes, I'm getting grift money. Oh my gosh. Yeah. No. Send it via Zelle. The banks right there. So I don't pay any money. Jules. Oh my gosh, Diamond Hands Invest. Oh my gosh. I mean, honestly, why are you watching this stream? Why are you watching this stream? Seriously, go watch that stream. That stream is like freaking crazy entertaining, it sounds like. No, I'm being serious, like genuinely. All right. Should we do the... Where is it? The inception moment, a stream of a stream, where it's just me streaming and then we're all watching this stream. No, like, because we can literally cause that to happen. That'd be hilarious. Where is Diamond Hands? Because that is so funny. Corn Pop. No. Okay, whatever. Anyways, we're not gonna do that. Don't worry. But that would be funny. A stream within a stream within a stream, and then someone else start a stream and then start streaming me, right? But yeah, in this instance, Echo's been a nice guy to me, so I'm not gonna say anything, regarding anything. But do you still have money in Swiss francs? Yeah, but I do so because I have I have a brokerage that allows me to do so, and then I actually kind of keep it in there. But it's just a small exposure. It's nothing like insane. It's not 50% of my cash or anything like that. But yes, I do, sir. What do you think about AMD at these levels? I mean, AMD, last time I checked, actually, has it come down even more? Let me see. AMD. AMD is at 79. It's actually up 5.24% today. It's not actually at the all-time lows of about 71. So if I show that here, let's pull that up. Oh, didn't mean to do that. 1 year. Let's go into the 6 months right here. So low point, 7.64% up. I mean, AMD at these levels, honestly, got to relook at it. But I know that a lot of you are probably really interested in AMD. It's just, I don't know. I really want a good margin of safety on it. I really do. Yeah, wow. No, I mean, that's crazy. What about a degree from Financial Fortress? Well, that's how you can get a job at JP Morgan as a super duper senior financial analyst. So if you want a super duper senior financial analyst job, that's where you go. He left. Okay, Echoes is kind of major gossiper, LOL. Nice guy, but to be honest, but he does well with it. No. I think like the strategy of like a gossip channel is going to succeed a lot on YouTube. I'm being objective, not inserting any bias. That will succeed on YouTube. That's actually what the YouTube platform will promote. Okay. Because it is a guilty pleasure of everyone, okay, to some extent. And even people who despise it might even click on it because they just want to know what the heck is going on. It's just a guilty pleasure of the human mind. So negative content does better. That's just it. So if you don't have negative content, it's going to be a bit more difficult to grow, okay? But still possible and completely content with the slow growth. Slow growth, but sure growth is awesome. Okay. Oh, yes, you can ask one more question. So specifically, when you identified that it was you said it was convertible, if I remember correctly. And so what you're basically getting in terms of that deal is that the company or Smile Direct Club is they're getting capital, right? That's the good part of the deal. But what they're kind of giving up in return, if I remember correctly from up above, in some of the comments you kind of gave us further context, was that in that deal, they're going to have to give up a good portion of ownership of the business should things kind of fall apart. That's more or less normal, but all in all, relative to actually probably, let me actually find it. I'll put you guys here. So SDC capital raise. Let's actually read into this. There we go. Wait, no, is this? Oh, I actually should not probably put SDC because that's probably an organization. Smile Direct Club capital raise. There we go. Okay, so anything new for here? I want to find the most recent one. So let's do news. Ugh. I got to go to the company itself, so let me find the company. Actually, you know what needs to be done? Someone can find the actual link to it. That would actually save me a lot of time because I'm wasting a lot of time just like scrolling through here. No, not capital mindset. Oh my God, Smile. Oh, I can talk about Align Technologies. Issues, debt funding. Okay. Or I just need the organization that lent it to them. If someone provides me the name for it. Oh, I have it page 15. Convertible, debt key, terms based, deal size, 650 million, Grecian exercise. Okay, there we go. 97.5 million, coupon 0.00%, conversion, premium price 40%, 18.06 settlement date, February 9th, 2021. Page 15 on what document? On what document? Okay, I cannot see the link. So I don't think it allows the link, which is unfortunate, Yusuf. Yeah, it does not show the link. It doesn't let the link to go through. Yeah, I know you're posting it, but I think YouTube automatically blocks links in live chats. So then I have to find it myself here. If you had to choose between investing in oil and uranium, I'd invest in oil, but not because it's better. It's 5 to 10 year time horizon. Man, I don't know, uranium then. What do you think about Align Technology? So Align Technology, I like it. Maybe my YouTube isn't showing. Okay, let me actually see if it's showing elsewhere. Yeah, it's so weird. Okay, so let me look up this instead. Smile Direct Club, convertible debt. Let's do that. And then that should come up. Please come up. All right. What year did it happen? Because they've been doing this a while. 2021, 2020. Is it posted in 2021? Okay. Oh, it is in 2021. Okay. I was thinking the whole time that that's not the one. I was like, there must be some newer one that happened. Okay. That makes a lot of sense then. All right. So going to the 2021 there. So small direct company announcing pricing of offering $650 million in aggregate principal, 0% convertible notes due in 2026. The notes in private offering is exempt from the registration requirement by the Securities Act of 1933 as amendment. Okay. Blah, blah, blah. Jargon. Okay, the offering size was increased from the previously announced offering size. So they got more capital, but what did they kind of remove from that? So they got, instead of 350 million, they got 650 million. I want to then see how much they kind of blew away from that. The notes will mature on February 1, 2026. That's when they have to do it, unless they're earlier repurchased, redeemed, or converted. Okay, so the wording there, or converted. So they can be converted. On August 1st, 2025, note holders will have the right to convert their notes. Okay, so you see, there's the language of it. So they can't convert it until August 1st, 2025, as per the agreement. Oh, it went to 750 mil. So they even increased it. So this wasn't even up to date. This is on February 4th, 2021 from the company. So I don't even know if I should read the rest of it because maybe other terms of it have changed. But yeah, from what I'm seeing, they're not allowed to convert it into shares until August 1st, 2025, based off of this. Okay. Occurrences of certain events from the note holders may convert their notes at any time at their election until the close of business on the second scheduled trading day immediately before the maturity date. Small direct club will settle conversions by paying or delivering a applicable cash of shares of Class A common stock or a combination of cash and so they can do so so they have the option. So Small Direct Club, from what I'm reading, has the option to, instead of giving them shares, they can do a combination of shares and stock, but the cash has to be the current value of the shares as per the agreed upon. And so what it is the lower and higher price strike of 18 to 25. That's the prices that they'll get it at, as far as my understanding. If I'm reading through here quickly, I keep reading here in terms of this agreement. Because like, think of it like an option, basically. If you kind of know how an option works, it's pretty much the same here. Redemption price will be equal. Okay, here it is. Redemption price will be equal to the price amount of the notes to be redeemed plus accrued and unpaid special interest in addition to the interest, if any, but excluding the redemption date. We're basically reading debt filings. We lost a lot of people in that. In connection with the price of the notes, Small Direct Club entered into privately negotiated. I'm kind of just trying to read through this if there's anything crazy. It's not really anything crazy, but now that I know it was issued in 2021, the actual arrangement probably wasn't as bad as I thought before, because now that context is super important. I thought that was really recent. So if this was actually back in 2021, oh my gosh, they just got like, okay, so they're almost at risk that they don't really get anything. Because you still have you have problems here. So right now we do see some. If they were to do this now, they would not get even these terms. These terms were good for what it was back then. Because now I understand like the timing of this. This was in 2021 when the share price was much higher. The valuation of the company was much, much more, well over $1 billion at the time. So now I can only imagine. So makes sense. So if they were to do this now, they probably wouldn't have the same optionality. And that's a bit of a problem with the company where it's trading at now. Their options are really closing in a literal sense. So debt financing is going to be very expensive. Equity financing is going to be very expensive. Well, what does that mean as a whole? Well, cost of capital going up through the roof. So that, kind of eliminates a lot of the optionality for the business to kind of, invest in certain projects, which is a bit of a problem all in all. But while at the time, you looked at it and say, okay, they get all this capital, they have all this money to invest, but yes. I'm here with finance content. If you want to gossip, go watch reality TV with your wives. Elon Musk, dang. I mean, look, like I said, gossip content is always going to do really well. That's just how things be. Oh, and Yusuf, I didn't bring up your super chat because I kind of was just kept addressing your other comments, but I did see your super chat. That's why we were going through it line by line. Austin, why do you keep asking like these questions about my death? Like, is this some? So you see, like, you're absolutely right. So that's the strategy to grow. That's just how it is. That is just how it is. Well, let's not kid ourselves. So I'm pretty sure that's also the case too. And okay, so this is what I was talking about with your other comment, Fabio. If you knew you were to die in a month, what stock would you buy or short? Oh my gosh, die in a month. So basically, like, we're gonna go, all or nothing. I don't know. Probably like, if I'm gonna. That's such a weird question to me. If I'm gonna die in a month, what am I gonna invest in? It's like the least I would think about. I would not even invest. I'd be like, all right, I'm done with this. I'd go like, used up my last month, but I don't know. I really don't know. A cop-out answer. I literally do not know. So my favorite gossip is watching Fabio about himself about China. Oh, doubt himself about China. No, I love those too. By the way, Elemental, there's a decent amount of people that think I'm like really bullish on China. Apparently, I found this out as well, that Alibaba is my second largest holding. I found that out too. I had no idea. Shout out to all you guys who know where that's from. Capital Mindset, do you choose between investing? Oh, yeah, I already answered that one. Kevin just said he hopes Echo's lawyer is super good. Oh my gosh. All right, Capital Mindset. Okay, so this is a Netflix question. Finally. Yeah, there we go. Capital Mindset, how does Netflix navigate the free cash flow, positive net earnings, and Discord tried Tell me I understand this, but I'm dumb. I'm still don't get it. Shout out to the Discord. Yeah. Discord has a lot of fantastic people, a lot of really good minds in there. So really proud of what I'm curating in there, and all the different people that are actually contributing in terms of thoughts and stuff. So with that being said, so to answer your question, how does Netflix have negative free cash flow but positive net earnings? Because they have a lot of cash expenses, such as, for example, investment in content. Investment in content isn't recognized as an expense, as a loss, because it's an investment. So let's say, for example, you have your money in your checking account, and then you are going to invest in the stock market. Is that a negative cash outflow for your net worth? No, not necessarily, but it could yield positive or negative returns in the future. Okay, so this investment is not reflected in the actual operations of the business overall, because we're going to include the investment in things that we want to use to grow. So in the cash flows, we're going to see a negative number, a vastly big negative number, because cash is on a cash basis of accounting. So cash is actually leaving the business. But we're not recognizing a loss of any sorts or an expense of any sorts to what we would, in the regular income statement. In the income statement where we would recognize, okay, there's a loss here, there's expenses with the operations there. This is different. So when you actually look at the different line items, kind of watch out for that with Netflix. You'll see the same thing with Disney, et cetera, et cetera, et cetera, Warner Bros. Discovery. But yeah, hopefully that answers your question, Will P. If you didn't, ask it again in a different way or elaborate on where I can help you out better. Or, there's probably even comments here addressing some of your questions down in, oh, yeah, they're already there. So you see, there we go. Julius Caesar is an accountant, I can tell you that. And he actually did a beautiful answer there as well. Suing someone when self-discovery as well. Yeah, that's the thing. When you sue, you're opening yourself up to discovery. So I don't think so, or I don't think it's easy, Austin. I think that it would be fairly difficult. But, here's your if you don't have a degree in finance and you want to actually get some sort of exposure to finance, have you ever thought of a master's degree? So you can get a master's degree. I'm going to probably get my master's degree, but, not in finance or accounting. I'm going to get it in data science. That's where I'm thinking about actually going back and furthering my education on that front. Just simply because I think there's a lot of skills I think that can be actually beneficial to my overall professional work career. And yeah, so I also grew to appreciate a lot of, and the different universities are going about it differently, but I think a lot of universities, they should adapt accounting degrees or accounting programs to actually be more of a data analytics or a data scientist accounting hybrid, which actually I was, lucky that the university I attended was doing that. Actually, that's actually what they ended up doing. And this was in consultation with a lot of the firms that they were working with at the time that said that's kind of like the candidates we want out at the end of the day. We want people who are well-versed and are able to kind of utilize the various data analytics platforms and understand, statistics and how to analyze data, how to clean up big data, et cetera, et cetera, et cetera, not just be accountants at the same time. So, and even a lot of companies today are, trying to go back and retrofit and teach a lot of their employees to do so, to improve upon that, because that's really important. Kevin was on the suit and for Grand. Yeah, things have come full circle. The circle is now complete. When I left you, I was but a apprentice. Now I am the master. Or I think I misquoted that, but yeah, you guys get it. In the InPost profitable parcel machine company, UK, Italy, growing at 30% CAGR and good valuation. InPost. What country is it from? Expanding the UK and Italy. Okay, I'll take a look at them. InPost. My gosh. I mean, okay, I'll look at the market cap, but stock price is a penny stock. Market cap is still respectable, $3 billion. So it's not really a penny stock in that front, but it's a penny stock in terms of price. It's not a micro cap. I mean, it's a small cap. So I'll take a look at them. Luxembourg, based in Luxembourg. So good tax, good business jurisdiction within Europe. So I'll take a look at them. Capital Mindset, thoughts on Bill Gates investing in farmland? Is that the future, bro? $5,000 donation. There you go. The grift continues, making tons of money. So Bill Gates investing in farmland, I understand kind of the thought process behind that. What he's basically doing is you're not making any more land, right? So no more land. So, there you go. So I'd say that to his benefit, we'll see how it is. There are some actual REITs that give you exposure to farmland. I think the ticker symbol for one of them is LAND, if I remember correctly. There's also some like privately held REITs that take investment. But yeah, there's other ways to get exposure. All right, so let's see some other questions. Capital mindset. Okay, so I'm so dumb and more confused about free cash flow being substantially higher than earnings. Well, net income or GAAP net income is based off of the accrual basis of accounting. So what that means is that, it follows the generally accepted accounting principles and, again, the accrual basis of accounting. So we look at things in a different light, and it's not meant to mislead you. It's actually meant to actually tell you the actual undergoings of a business. What I always try to highlight is that over long periods of time, the cash flows and the earnings should match. They should match. Over a long period of time, they should match. So some years you have, more earnings and cash flows, et cetera, vice versa. Over a long period of time, they should move in the equal direction to one another, unless there's fraud going on. But, if there's no fraud going on, it's just because of the different ways how they recognize things. Cash basis of accounting versus the accrual basis of accounting, you're going to see those differences. And so there's nothing really to be concerned about. And of course, then there's the tax basis of accounting, which is, different because the IRS has their own ways how they would like or how they recognize, certain levels of depreciation, how you can depreciate certain things. So then there's tax accounting, which is another thing. All right. Hey, Fabio, is there an email we can send interesting clips of to you? Yeah, you can send it to my business email. I don't really have a separate email for that. So if you really want to send me stuff like that, yeah, go ahead and just send it to my business email. You can infer that in the About Me page, I think, and you actually ask YouTube for it, and then YouTube gives it to you for inquiries. And yeah, you should be able to get that. So let's see with these other ones. Yeah, I see. Okay, so everyone's talking about the echoes from above live stream. Yeah, so yeah. If it happens, it happens. If it doesn't happen, it doesn't happen, guys, in terms of the lawsuit. But I can tell you that would be a very big mistake. If he sues Echoes from Above, that will be a huge mistake because that will make Echoes from Above absolutely massive. It will guarantee that he will have a massive YouTube channel, literally overnight. And I think, the strategy is working. And if Echoes joins the live stream and he's hearing this, your strategy is working, dude. If you going after Meet Kevin is growing your channel, I mean, come on, look at the growth. It's like at like 3.56, and it blew up all of a sudden. And I guarantee you, this drama, Kevin is making a huge mistake if he wants to kind of not grow that, because it's only going to if there's a kernel of truth to it, and especially if there's a lawsuit that ends up in discovery, it could backfire on Kevin. Not so good there. Now, Kevin is a man of means. He has a lot of money, well and good. Echoes from Above, though, if his goal is to grow the YouTube channel, this is going to be very good for him. This was really good for him. This was the best thing for him. This drama. Yeah, so I don't involve myself too much with the drama. Of course, it's almost like sometimes it's like impossible to avoid it, Gil. There are instances where I'm going to obviously get involved in some drama by either desire, accident, or just like fell for it in terms of, how do you say, when you fall to your guilty pleasure. Because like I was talking about earlier, it really is, that is the content that does really well on YouTube. Negative stuff, etc., stuff like that. So the truck stop principle, did he think he could get in trouble by reporting in trouble for reporting in Google? No. And yeah, that's like where I'm saying it's not looking good. He should not be doing that stuff. Not Echoes. I'm talking about Kevin. Ricky, the market will bottom. Okay. Oh, it's for someone else. So I'm comfortable with adding with SPY, QQQ, Julius. Fabio, can I get a request to make a video about how to analyze stocks in the mining sector? Okay. I mean, mining companies are absolutely terrible for the most part, but there will probably be some in there that are diamonds in the rough, so to speak. Oh, thank you, Elon Tusk. There you go, guys. You guys have high IQs. Elon Tusk has deemed it so. RE in Post, real estate in Post. They're essentially the USPS of Poland. Oh, okay. You're giving me more context. Yeah, Polish companies. There's a lot of opportunities in Polish companies. So knowing that it's a Polish company, gonna make it more interesting that I look into them in post. And actually, there was actually a couple companies in Poland that I found quite interesting. I probably do it in a foreign stock series. So in post, let me add that to the foreign stocks in post. All right, so let's see here. Better job through comments. You're doing a better job getting through comments. Yes, I am trying. Like, because I hear you guys' thoughts, and I understand that, what's a live stream if I don't get through, but I desire to try to answer, because that's what the live streams are for. If you guys ever wonder, the live streams are for anyone to kind of either address a concern, even like in a confrontational sense, which the rules are generally speaking pretty easy or simple. You as far as I go, I'm fair game in terms of ad hominem attacks and blah, blah, blah. If I ever have a guest on, I ask everyone to be respectful in the live stream. You can address your concerns, and it's all well and good in the comments section afterwards. I can't stop you from doing that. Please tell me how you feel and all that. And yeah. And so I am getting better. I'm trying to get better at getting through all the comments. Oh, we have a super chat. Thank you so much, Dan Weston. No, I'm kidding. That's not the show, but thank you so much. I really appreciate that. So thank you for exposing new investors to industrials and REITs. Yes, so I'm glad to do that. And even though, they don't necessarily get the views, they are, I think, a good source of value, in my opinion, obviously, because that's kind of biased, so let's just say that. But in my opinion, they are valuable content because it exposes someone who's trying to learn about investing to, yes, new asset classes, new companies never heard about. And I may not have the answer they were seeking. Maybe I said, I don't really know if this thing is good or not, but at least they get the exposure. I do share my opinion on whether or not I think it's good or not, but at least they get the exposure, and then they can go further from there. And they kind of hopefully opens up their world. And we have a lot more people out there who are, investing, exploring, thinking, sharing their thoughts in the capital mindset community. And then, hopefully that benefits everyone, like a circle of benefit. But thank you so much, Dan, for the super chat. I really do appreciate it. Okay, so Echoes is already asking fans for donations for legal fees since he's trying to grow his channel. Oh, well, I didn't know that. If Echoes gets big, he'll promote all you guys. I think he'd probably do that for sure. I think that's what all of us have been doing. And the video tomorrow has something that's a little bit on the nose because of the large creator that was supposed to come on that didn't come on. But it's all well and good, all weather under the bridge. All right, so capital mindset. Are you following the crypto meltdown? Yes, we have been following the crypto meltdown. So it's like the best soap opera now with it being the creditor, shareholder, borrower at the same time. Yeah. Well, how's the Ponzi scheme working? Look, I don't even know where Almeda gets all its money. Gosh, who's funding all that? That's a question. I have no idea. But yeah, I am following it. I don't make a lot of videos on, even though also I know that this channel would grow faster if I do crypto content. I know that's how it works. That's the formula. Just crypto, and then it allows you to grow. All right, that's just how it is. YouTube has I'm not unaware of the methodology for how to grow on YouTube. It's just All right, so any thoughts on Sen's implanted glucose monitoring system? I had a company that was in that, and I discussed this when I talk about Teladoc. So I get excited because it was a really good performer. But Teladoc bought my company, Livongo. I say my company as if I own the whole company. I don't own the whole company. But Livongo is a company that did that, exactly that. And so when Teladoc bought them, I was given shares, and I didn't want to hold Teladoc. But yeah, I'll take a look at them because that's an industry that I like to look into because I have a friend who has type 1 diabetes. And so he uses a lot of glucose monitoring systems, or he's experimented with several in the past. And I always gauge him for his opinion as a consumer, et cetera, et cetera, et cetera. But yeah. I saw someone just say, please don't waste your time on crypto. Don't worry. I only have things to say about crypto when I'm trying to explain how certain systems work. So I was trying to explain, for example, the Anchor protocol, which no one really even understood how it worked. And then Luna blew up, right? So, yeah, the Anchor protocol in and of itself was one of the very interesting things about the Terra Luna system. And when I was actually discussing this with a friend of mine. He's actually in here somewhere. I'm not going to, oust you. Don't worry. But I know you're in here watching the stream. And he's a good friend of mine. He was actually investing. We discussed the Terra Luna system. I read the white paper, for example, and I was discussing like, okay, well, that like Luna is like the stabilizer for the Terra system. And so anyone who gets involved in crypto, read the white paper first, and then kind of gauge from there what are the risks that could be associated with the actual cryptocurrency, especially these utility coins that have served a purpose. But yep. We get a question. Fabio, what would you say the chances that we have reached the bottom outweighs the chances that we crash more? Look, like I kind of been feeling that. Like I can't help but feel that because a lot of people are now pessimistic. That's why. That we would be closer to a bottom than we are to a top. Because so many people feel it. Like when I was talking about things in January, and I actually was going over some of my old tweets, there was a tweet that, let me actually see, do I have my Twitter open? Let me actually, there's a tweet I posted on January 6th, and I'm going to be tweeting more because I think Twitter is a good place to just get, content out there, or just quick thoughts out there. So grifting again, follow me on Twitter because I make a ton of money from Twitter, but follow me on Twitter so I can grift. But yeah, there was a tweet that actually, look, I'm at 89 followers. If I get to 90 followers, I take my, no, I'm kidding. Can you imagine? We get to that level. It's like if I get one follower, I'll take my shirt off. That was a joke, by the way. That was a joke. But yeah, there was. I actually, and that was the tweet that I got a question or an ask by someone to say, hey, can we do a collaboration? And you never responded back. If you're watching, you know who you are. But yes, so I think we're closer to that. But anyways, where was going wrong? Netflix buys cash in some subs. Cash from subs, spends operating income, more dilution / debt on new content. How spend more money than new bought in? How is money left over? Okay, so because there's a point in time. So like look at something like Amazon. I know I'm using Amazon, but Amazon's like a good example of this over time. So are you going to punish a company because they have growth CapEx? So when you have capital expenditures, like you're spending on new equipment. So I can say this from the context of my former employer, for example. Like, for example, let's say there was a new client that was, I don't know, like I'm going to make up some numbers. Like the contract size was like $1 million a month. And that would probably increase, so about $12 million a year. That would probably have a spend, let's say, of equipment in terms of like maybe a couple million in total. And so in terms of like hardware equipment, so are we really going to punish the company in terms of an evaluation on that growth CapEx, right? That CapEx just needs to be one and done, and then you have that equipment, you can use it on other projects, but basically you need that growth CapEx to kind of afford and take on new projects. Like for example, Amazon, they do that with warehouses. You cannot and you should not punish companies for growing or for investing in growth. So it's a very big difference. Now, what you can punish companies is just for having no positive operating cash flows in general, right? Now, the thing is, or the nuance behind that is in that operating cash flows, you have to include content spend, which included in that is a growth CapEx kind of narrative, right? So you have some of that money that's being spent and it's saying, okay, well, how much of that is being spent on growth? Very hard to determine. I'm not going to tell you it's easy. It's very hard. Oh, I got one follower on Twitter, so I'm going to take... No, I'm kidding. I'm not going to take off the shirt, but... But thank you, everyone. We are up to 90 followers, all right? We got a lot of followers pretty quickly. Got to say that, all right? Capital Mindset Twitter has grown faster than the Capital Mindset Instagram. So Capital Mindset Instagram has actually grown nicely, but Instagram is going to be a little bit harder to post than Twitter. Because Instagram, I got to find a meme or something. Like what else do I post on Instagram? It's like pictures and stuff, right? There you go. I'm bearish on Facebook and bullish on Twitter. Just kidding. More like the opposite. But anyways. Yeah, hopefully that kind of answers your question. So, yeah. If it didn't answer your question, sorry, it's accidental, and just ask the question again in a different way and say, you didn't answer my question. I don't like drama. I like tofu. I like making babies. Elon Musk. What the heck? I mean, Elon Musk likes making babies. All right. So, Calvin Mindset, do you think Netflix's margins will get better or worse over time? I think they'll get better over time. Okay. So, Netflix is a company that every new customer they add is just money that goes all the way down to the bottom right line. Each new customer they add. So, the scalability is perfect. And Spotify, who actually mentioned this? I think it's Oswath, the dean of value investing, or him, dean of valuation, sorry. And so he actually addressed this, and I think it's a really beautiful idea. So Netflix is a company and Spotify is a company that you take them side by side and you compare them. They're vastly different. Well, not so different, but they are very different. And in the case that Spotify has to spend more and more and more, the more users it gets. Netflix, not so much. Netflix has its spend, and then each new additional user is just pure profit, because they're going to spend what they spend, and then afterwards, it's all well and good. So like, let's say they spend $1 billion. Every person they get after the fact is just $1 billion, right? They have the $1 billion to spend. Every person they get on top of the $1 billion, let's say they get $1 billion in $1, $1 billion in $2. They only have that $1 billion in spend. So each additional one is just pure profit because their expenses are already accounted for. Spotify, on the other hand, is quite the opposite. The more users they have, the more they're actually going to have to spend on that content because it's on a use case basis. So it actually comes to a different scenario where Netflix doesn't necessarily also care how much you use it as far as they are structured right now. At YouTube, for example, this is something that I don't know if the Dean of Valuation has mentioned this, but I'm going to mention it here. So for the record, and I've talked about the recapture event. No one else has really talked about that. So that's my word. Okay. That's my word. But the recapture event, something like Disney has it. Netflix is going to get into that, and where they actually put their stuff in the theaters, they can recapture some of the costs. That actually lowers the risk of certain projects. Like Disney, when you look at their content spend, it looks a lot more than Netflix. You have to understand the context that they also have a huge amount of products that are actually going to the theaters, et cetera, and stuff like that. They have a huge media business. So they spend a lot in media in general. 33 billion, I think, is the total. So Netflix, as far as they are right now, they're not an advertising business. So YouTube actually cares about the usage case, unless you're on YouTube Red. If you're on YouTube Red, different dynamic. Once you go on YouTube Red, you exit the point of they desire you to consistently use you, or the importance of your use doesn't really matter as much. It matters for the probabilities that you're going to keep the product, okay? Because I don't want you to think and kind of misconstrued what I'm saying. I'm not saying that if you don't use it, it's not a bad thing. If you don't use it, it's not like, let's say, if I don't watch Netflix for a year, but I remain subscribed for the duration of that year, does Netflix care? The answer is no. Not necessarily. They care because now I'm probably really likely to unsubscribe. They care from that perspective. But you guys get what I'm saying? From in terms of a revenue perspective, they're still making the same money. YouTube, on the other hand, let's say I stop watching YouTube for a year. Let's say everyone in the world stops watching YouTube for a whole year. Okay? If no one has, YouTube Red, for example, or YouTube Premium, then YouTube's definitely going to care because they're an ad-based platform. They need viewers. They need usage of the platform. So under the same two contexts, if we say all those subscribers to Netflix, they don't watch for a year, but they don't unsubscribe, Netflix will not change. They will maintain the same amount of inflows. YouTube, no. YouTube, they need the usage. Facebook, they need the usage. Instagram, it needs the usage. Twitter, same thing. So they do still care about usage from the perspective of your probabilities to unsubscribe. All right? That's where I was going with that. Okay. I went on a huge tirade there, but hopefully you guys enjoyed that or found value in some case. Would you be interested in other Polish companies you mentioned? Pockets are great. Companies caught up with them. Yeah. There are actually a bunch, and some of you in the Discord have been talking with me about them. And so you guys already know. Capital mindset. Would you say that the chances of the bottom? Oh, yeah. Already answered that question. Please. Okay. I'm just catching up to the bottom. Capital mindset. Are you familiar with the dollar milk? Yes, I am. I've talked about the dollar milkshake theory, and actually, everyone should go read it if you guys are intellectually curious of the dollar milkshake theory. I think it's actually been renamed to the dollar black hole theory. Okay, because he kind of thought Brett Johnson thought that the dollar milkshake theory was a little bit more comical, so he changed it to dollar black hole theory because it sounds more scary, more dangerous. All right, so that's what I think. And like you can actually see some of it kind of manifesting, but for those of you who don't know, the very, very quick synopsis, how I would explain it to a child is that with dollar milkshake theory, you have basically a very strong dollar. Dollar's a flight to safety, strengthens dollar. Rest of the world has a lot of debt in dollars. It connects to the euro dollar banking system, kind of thinking of things. And if the dollar rises too much, that then can cause a massive wave of delinquencies across the globe, global financial restructuring, global reset, It's basically a very quick synopsis of it, but go read it if you're so inclined. Not really for me, but I understand. I've heard of the business. I have heard of the business. What are your mindsets on capital you rename steel or steel other than Rio? You mean other than Rio? No, I have not invested in it yet. You ever in copper? Yeah. Other than Rio Tinto, no. But Rio Tinto's on its way out, right? Rio Tinto is much smaller than it used to be. Yeah, don't worry about that. People can ask if they don't see that. I answered a question. Tom Snatch. I already answered that one. Fabio, you're planning to take a CM public via SPAC, $4.20 a share. Can you imagine? I mean, shirt off, boy. I just saw that. Can you imagine if I did that? That'd be hilarious. Be a publicly traded company, $4.20. Make it on CNBC. Thanks for the explanation. Awesome. Okay. I did not answer your question. Okay. So I see your second question. You tried to trigger me, JP. I saw that and I immediately got triggered. I hope you know that it worked. I just want you to know that it worked. I actually got like somewhat triggered there. So capital mindset. Netflix brings in income. They spend more money than they make in income on new content, hence negative free cash flow. A number minus the large number is negative, right? How do we end up with positive net income? Well, because of what the recognition of that cash expense is. Remember, in the actual P&L or the income statement, we're using the accrual basis of accounting. We're recognizing certain things as expenses to the business. And on the cash flow statement, what we're doing is reconciling that. And we're kind of changing it for, what were cash inflows and cash outflows. So when you have, let's say, a brokerage, this is the best way I can kind of explain it to you. You have a brokerage account. You have $10,000 in your checking account. You live your life and you have all these expenses. You take $5,000 and you put into your brokerage. Did you have an expense of $5,000? Did you lose that money? Is it gone? No, you invested it, right? So you don't recognize that necessarily. So we have to reconcile that as a cash flow expense, because technically speaking, in terms of your checking account, you're going to see a negative $5,000, but that cash isn't gone, right? The cash might have a future positive value or future negative value, depending on what you invest in. You could invest in Voyager Digital and get $0 at the end of the day because it goes bankrupt. Or you could invest in something like alternative universe Voyager Digital, where they actually went into electric cars and had vegan robot chefs. And in that future, your $5,000 turned into $50 trillion. And so in that case, you had a positive value. But in either way, we wouldn't recognize the negative $5,000 investment, and in this case, separate your brokerage with content as something that is an expense per se, so much as it is an investment. It is a negative cash outflow from your checking account, but not a expense, so to speak. Okay, does that make sense? That's like I'm oversimplifying it, but that's a way to think about it. And that's kind of like the differences between the two. So net income is supposed to recognize it on the accrual basis of accounting, GAAP basis of accounting. So if I did that correctly. Let me know if I explained it well and you understand it now. I try to use a simplified example. I like to do that sometimes to, bring it down to earth. Okay, so Kevin Mine says, there's a point where Spot can scale like Netflix. Yeah, that's the thing. So I think Spotify should focus on trying to acquire rights to things over a long period. So like owning the actual artist content. And if they can do that over time, like actually become the record label, that's where I think they can scale. And I think they're trying to do that. But I think that's the obvious thing. They need to do that. They need to acquire current record label companies and then build a portfolio over time so that they can scale in that way. But the thing is, as soon as they start doing that, who's also going to do that? Apple. Apple's going to do that, right? And Apple has a lot more money than Spotify. And that was one of the things I'm scared about. Also, I got, a notification, and who's coming into the game really strong and who's really trying to entice me? Amazon. Amazon's coming in. I'm getting the mail, and Spotify. The only way you're going to fix this, Spotify, is if you sponsor me. All right. This is a corporate hostageness. All my followers here, we're all going to switch away from Spotify. We're going to go to Amazon Music, right, guys? Right? You guys will follow me, right? So I'm just kidding. But in all seriousness, I am actually like considering the value proposition that Amazon Music provides to me. And yeah, we're going to become like a full Amazon household. You know, it's just like Alexa's everywhere. I have an Alexa built into my brain, my phone. You know, I have the non-released Amazon phone. Hey, JP, don't make fun of Amazon Music. Amazon Music's going to take over. You'll see. You'll see. You laugh now, but they're going to acquire all of the studios, and they're going to be paying royalties to Amazon. You'll all see. But yeah, capital markets interesting. Yeah, I'm interested in adding to some other chemical producers, not necessarily LYB, because I want some. I want to consider it all as one position. And I'm probably going to designate it as a partial core position, because I remember I do that. So LYB might become a partial core position, and I might have other positions that kind of together with LYB make up as a core position. So, you know, for example, not saying that this is going to be the case, but you could have, you know, a Dow Inc., right? Dow Inc. and LYB together are a core holding. Separately, they are partial core holdings, and they both serve their purpose, give me different exposures, and they're basically, you know, competitors for all intents and purposes. One obviously might be better than the other, but for the most part, they dominate their respective areas, and I can get some different exposure while at the same time playing, oh my gosh, sorry, to the same core thesis, all right? Just like choking there. I'm almost like died right there. And then Austin's wish would have come true, where I died and I should have thought, what would I invest in the next month? Where change network capital is calculated in the way that last year's working capital is subtracted from the capital. Why? Okay, so this is the question. Why is change in net working capital calculated in a way where the last year's working capital is subtracted from the year before? Where last year's net working capital subtracted from the year before. You're asking me, okay, because change in net working capital or delta net working capital, if I pull up let me see the format, because I'm trying to see which one change in net working capital. And then, yeah, because you're describing it as network. No, it's the current period. I was like, why are you using the last period minus the one before that? That's why I'm confused. I was like, because you're saying change in network capital is calculated in a wait, I have to maybe reread this question. Maybe my brain's shutting down. Why change in net working capital is calculated in a way where the last year's working capital is subtracted from the year before then? Yeah, because change in net working capital is from the current period, or net working capital from the current period minus working capital from the previous period. So I don't understand the question. Is there something other? Is there a part two to this? Okay. Vegan food, chefs, robots, yeah, happening. I have no idea, man. I have no idea. But like, I think we're closer to the bottom. Like back when we talked, if you asked me in January, that'd be a different story. If you ask me now, I'm going to say I think we're close. We're far from the top. Right? We're probably closer to a bottom than we are to a top. My opinion. I'm just buying assets I like, and that's all. Any thoughts on Warren Buffett's massive stake? Okay, so that's what I was actually discussing with some of the Discord community members who are very well versed in oil investments. And I was like, man, is he seeing something that we're not? Because I'm looking at, for example, some of the inventory data, some of the, the manufacturing companies, and they're kind of all pointing to that aggregate demand is going to decline. Right. But this guy's just rolling and just investing in, well, small parts of his portfolio, but he's investing and investing. He could be wrong. But, I don't know. It makes you think. It does make you think. Because, obviously it's the man himself, right? Anything he does, we're all going to be like, oh my gosh, what is he doing? Market isn't bottoming until Apple falls. I actually think it won't bottom until Tesla falls. And, I did a Discord call, and part of the summary of that Discord call was that my personal belief, actually, finally you say Apple, I said Tesla and Apple, because Apple is kind of like the bastion of safety. So I actually agree with you, Frankzilla, or Frozen IKEA. Why did I say Frankzilla? Frozen IKEA. Oh my gosh. I apologize. But anyways, I think that Tesla and Apple are like the last bastions of quote unquote hope in this market, which, by the way, did you guys notice that, Jeremy actually sold a big portion of his Tesla from what I saw. Fun fact. So good on him because he should have done that much earlier. Good books and methods to learn corporate accounting for this stuff. Corporate accounting. Besides an accounting textbook, because you could just look up. Let me actually see if they have options because I want to test this out for myself. Internet. Okay, so this should have books for free. Let me actually see this. Oh, the only thing is that there have been updates to standards, so you got to be careful with that. But if you go on the Internet Archive, you can actually find a lot of books, and you just type in accounting. But just keep an eye out on the dates because standards change over time. So yeah, just make sure with that. But you'll find a lot of free resources there. Also, there's plenty of videos online on specific parts. Google failed at the music thing, and they've got all the cash in the world. Yeah. I often actually talk about that, JP, because people often say that the bigger the company. I almost have to say that Amazon's going to succeed. But no, in all seriousness, I will go to the one that's going to offer me like the best quote unquote value. I'm loyal to no one. Okay, because Spotify, at the end of the day, I don't actually use it more for its social aspects. I don't really care what my friends are listening to. I could not care less. I only listen to music when I'm at the gym, and that's about it. Kiso Wagan. Actually, yeah, there we go. Noam, thank you for actually noting that to the individual. Kiso Wagan. That's a good textbook there. Viva Don Fabio. I love the name Don Fabio. I'm just kidding. The earnings have not come out yet, and the expectation is still high. Therefore, the downside on surprise. What are we talking about? Spotify? I have Alexa built into my Gooch. Okay, so I scrolled down, so I apologize. Skip over your text. I'm trying to get to it's so many comments. All right, Capital Mindset. I don't get why investing in content isn't a tax deductible event. I guess. No. There's tax accounting. No, there's tax accounting. So Will P. So there's GAAP accounting, or normal accounting. Let's just call it that. Normal accounting, tax accounting, and then cash accounting. Okay, so no. Like I said, the IRS has its own things, and you can talk to a tax accountant. They'll tell you the same thing, right? It's different. When you go to a tax class, you'll learn. Okay, we have the reconciliation between the book accounting and tax accounting. So you got to reconcile the numbers because there's differences in what you can depreciate, what things you can kind of expense that are different from the GAAP standards. And I'm speaking on behalf of the United States, not on behalf of the United States, sorry. I'm referring the United States. IFRS and will have different things with their own respective countries, but because IFRS is the international standards, by the way. So if I'm staying brand new and starting position, assuming your prior holdings, which stocks would you recommend to do DD in? Okay, so I think that a lot of the industrial stocks are going to get hammered, and among them, we're going to find some diamonds in the rough, as well as the semiconductors. We're going to be able to find among these companies some interesting opportunities. Not all of them. Some of them will, be bad investments, but some of them will be good. And I think the sentiment will, kind of show us that a lot of people are looking at it as, I don't want to invest in that, blah, 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 blah. You see, JP is actually providing some insight because I know he's also an accountant, and he's actually providing for that question about, or that statement about tax accounting. So he's saying depreciation ain't a thing in tax accounting. He's providing some more insight there. Kind of mindset. Maybe Warren sees that the long term of capex and oil is So that's the thing, but maybe over the short term but he's probably looking at it from a long-term perspective. I think a lot of the long-term tailwinds are still there for oil, and that is the lack of capex. And the lack of capex is actually one of the theses that I actually cited in my old oil videos. You guys go check out the old oil videos I had. I cited the lack of capex investment, primarily when the Biden administration took over, regardless of your politics, the sentiment around capex. Let's say, let's remove anything that Biden has done. The sentiment that companies would feel going into that would not be ideal for capex investments. So regardless of how you feel, that's just how it is, right? And that would have effects down the road, right? And you also have the combination of the COVID-19 pandemic, and then on top of that, various policies that then were put in place. So all that kind of culminated into a kind of a perfect storm. And if you were an oil bull back then, when no one wanted oil, you did good, right? You did good. So patting on the back there. Now, I think we're going to have, well, for now, knocking on wood, because if my ConocoPhillips position, skyrockets even more. Well, I don't own it anymore, but you know what I mean. ConocoPhillips skyrockets even more. Then I'll be sad. But so far so good. We could rebuy the whole position and be okay. Okay, so I already saw a question about tax accounting. No, it's not really important to know tax accounting as an investor. It's not going to kill you. You're not going to be a terrible investor if you don't know that. Tax accounting and GAAP accounting over time also should meet as well. So everything in accounting is not done stupidly, right? Ideally, like they don't do it on purpose, like to be stupid in any form or fashion. It's pretty well thought out in a lot of the changes they do. So over time, it all should converge and follow each other more or less. So tax accounting, GAAP accounting there'll be differences and there'll be reconciliations, but over time they do converge. So, don't worry. You don't have to know tax accounting to be like, oh my gosh, I need to know. Your opinion on Sven Carlin staying away from North American stocks? I would say that is a mistake, in my opinion. And that is because, if he's worried about the macroeconomic environment and he's investing in a lot of European stocks, I don't know what to tell you, because the macroeconomic environment for Europe is far worse than the United States. Like, United States is the good neighborhood in a bad, the good house in a bad neighborhood. So a lot of places are bad, but the United States is really good in comparison. I mean, Europe has a lot of problems that are on the horizon. Not every country in Europe, but a lot of countries within Europe. Remember, half about my audience, I bet all of them are asleep. If you're not asleep and European, you're respectfully, you're a freak. I'm just kidding, but no, in all seriousness, for the European audience out there, you guys have your own perspectives of your own different countries. The data is kind of telling me that there's a lot of issues ahead for Europe. And, again, not all parts of Europe. I had some comments, saying, and I had to correct it when I was discussing with the subscriber that, they were from Switzerland, and they said, well, you can't say all of Europe. And I was like, no, Switzerland is fairly stable in comparison to, some parts of France and Spain, et cetera, and Portugal. So different economies in Italy too. Different economies are going to suffer differently. It's different economies are, it's all nuanced. You have to basically ask me on the different countries. But, for example, we're having some political upheavals in the UK right now. We'll see how that kind of pans out, how that's going to end up affecting things. But all in all, that's those are things that I would say. And I think Sven Carlin primarily focuses on that. And again, like we've talked about on this channel before, I've shared in my macroeconomic videos, for example, why not? Let's actually showcase this. So some food for thought. Let me pull this up. I always keep it in the file here, and I share this as much as I can because it's really interesting. Economy charts. Let's pull this one up. Money velocity. All right, cool. And let me show it on the desktop. So let me actually remove this comment so I don't block it anymore. All right, so if you see here, this is the money velocity of the four major economies that are listed here: United States, Euro area, Japan, and China. Well, what do you notice down at the bottom? Well, you probably see, and if you don't see enough, let me actually try to zoom in. Oh, you see China. China's down there. Well, what's up with China? What's going on, China? So China has a very abysmal M2 money velocity, okay? So you might find different explanations as to why, but they've had a very abysmal money velocity for quite some time. And despite all that, they've experienced some growth. So then this proposes some questions. How did they achieve so much growth if the money velocity is so poor? The money velocity being so poor kind of indicates the money's just not flowing as much as you would think. United States, all you can say, whatever you can say about it, we are still positive. We are going to get below 1, and Euro area has been below 1 for quite some time. Actually, the financial crisis was the thing that shoved them down there. And so they've never really recovered. This is where you can kind of get into that United States or the world has been in a quote-unquote silent depression for quite some time, but United States has been the better house in a bad neighborhood. So yes, so China, if you've seen any of my macro videos or my opinions on China, China is the country that has a lot of issues that, again, I go on the live streams. I have friendly disagreements with co-hosts. about, the investments in China. And, some of you in the Discord community or the subscribers, you guys also have probably also differing opinions on China as an opportunity. There's a lot of issues that I have with China. One of them being actually some of the growth factors that they're not really actually as much there. For example, we knew a lot about how they were building bridges to nowhere, cities with no people. And a lot of that growth might have been attributable to that. They also had this overcounting of their population, which is kind of funny. You guys should go look into that, by the way. But yeah, the overcounting of the population was something that was kind of comical. And so, totalitarian governments will always never admit that they made a mistake, just so you know. So they'll always try to cover it up. By the way, the Venezuelan government, where I'm from, they did the same thing. They all do the same thing. But yeah, just kind of highlighting that things are not really looking good for China. That's more like good news if you're, for example, a American patriot, so to speak, because yeah, it's probably everyone. So the obvious choice for a successor sometimes isn't even the winner at all. Not sometimes. A lot of times might even be the winner. Similar to how, like, in the market, in the stock market, if everyone believes the stock is the best stock to invest in, maybe it's not. Most likely it's not, right? Similar to this. Like, everyone thinks China's going to be the successor to the United States. So then it's not going to be, because it's the obvious one that everyone's always picking out. So it's funny, like we'll see over like the next 50-ish years how that plays out. And when I die, if China is the world superpower, I can probably guarantee that the world will miss the United States. But yeah, because yeah. All right, so enough zooming in on that. So I'll keep that up there if you guys have any questions on this. But capital markets kind of situation like 2008. Yeah. So that's what I'm thinking. I'm really thinking that's probably going to be more likely the case. Oil and gas, E&P. Yeah. So you'd have to be no large cap. So you'd probably be finding very specific players with very specific advantages. Okay. Armando, the UK capital mindset opinion on the theory of Sen Carlin in Count. Oh my gosh. I mean, maybe he is. I don't know. That's funny. I've never heard of that one. I'm an absolute beginner looking to invest for the first time. Should you wait for stocks to go lower or start buying now? Interested in AMZN, Google, AAP. I know you meant AAPL. Airbnb, ABNB, but price still seem high. Okay, so Ado Katan. So first time investor, then you got to consider your situation that's going to be unique to you. So I cannot provide any specific advice, but like the situation specific to you, like do you have money coming in? Do you have a fixed amount? And then that will dictate like your strategy. If you have a fixed amount, typically speaking, it's probably better to than space it out. But consider the various opportunities available. And in fact, actually, tomorrow's video is going to be maybe made for you to get you started in terms of understanding what products are out there for you in terms of offerings, like index funds, for example. They can get you broad-based exposure without any thought process to it. And then what you need to do is over this next development cycle, figure out what works for you, what gets you in the game, what keeps you motivated in terms of investing. Because overall in your journey, it will be positive for you to at least enjoy it, understand what it is you own, but then consider the various different strategies. For example, watch the video tomorrow and you'll be able to see it's, episode 1 of the course, free course, except, it's not free. You have to pay me $50,000 per second. But yeah, for the most part, you just watch it on YouTube and then there you go. And then in there, I'll go over some of the various beginner-based strategies or various products that you might want to explore and some of the benefits of those products, et cetera, and stuff like that. So, but yeah, and if you're starting, try to figure out what kind of companies are interested in you, because you should never, as a rule of thumb, I think that's kind of broadly enough. You shouldn't own something you despise, because then you're more likely to make mistakes. So then figure out what kind of assets you like to own, and then try to understand, try your best to understand. And then in this game, the only one you're going to hurt if you're not honest is yourself. It is yourself. So you might say, I'm confident enough, I'm ready to do it. And then, don't lie to yourself. Do this when you're ready. Do this when you're absolutely ready. Depending, again, on your situation, you might be able to ease in over time. Maybe you can put in and then you have income and then you live below your means. So you have a delta between your expenses and your income, and then you can continually contribute over and over and over again. And then you can learn as things go. The companies you mentioned, I can say that, I don't think they're bad. Well, Airbnb is the one that's the most speculative of the ones you mentioned, but they're not bad companies. But that does not mean, when I say that does not mean that they're a good price. And you have to then start to learn the difference between a good company and a good price for a company, because a company can be very good, but the price might not be appropriate at the present moment in time. And then you're going to have to explore that. Okay. So, get to understand all the products that are available to you, understand what it is, if you're looking to buy individual stocks, what does that mean? What are the opportunity costs? What are you kind of giving up with some of the products? Because I'm not going to sell you on a pipe dream that individual stocks are going to make you rich. Okay. That's definitely not what Capital Mindset's going to do. Okay. I'm going to be pretty honest with you. The vast majority of people are going to be very unsuccessful with individual stocks, for the most part because of psychology. That is one of the main reasons. But hopefully that answers your question. But welcome to the investing world, and the community as well. I am European. Oh, you doxed yourself, Milan. I cannot. Where are you from, Milan? I'm kidding. That'd be funny. Gap, Rick, to do with accounting. Oh my gosh, food for thoughts. Suck it, China. Yeah, Dan. Yeah, I know. Switzerland, not so energy independent. Trying to go through this. Capital mindset. Can we have a brief oil crash? Yeah, I think so as well. And then, yes, elevated commodity prices might actually soon follow after that. Obviously, there'll be some forward correction. That's probably what Buffett's playing, because he plays the long game. He's not interested in playing these, because if he's getting invested now and he thinks the oil is going to crash, he's just going to buy more. And maybe he's actually going to do a lot of good deals. That's actually what I think he might actually get. But yes, I'm only invested in the developed world ETF. Yeah, I saw those actually do exist, but they're very expensive too, though. I saw the expense ratio. I actually discuss it tomorrow in the video. Uganda will be the next assessor. Because it's the one that no one expects. Capital Mindset, I understand. Capital Mindset, how do you give us a discount for the course? How do I pay 20? How about 20K per second? All right, 20K schmeckles per second. I'll settle for that. Investment in North America, Korea. Okay, so what the heck is it doing it again? So then there was a question. Yeah, you see, it does this sometimes. So by the way, I'm just going to let you know, because I feel bad, because so Sal Games, for some reason, I don't know why, it doesn't show your comment here on this widget. So I see it here on the YouTube, so I can't actually pull it up. But you're saying CFA or CPA. Well, the answer to your question for that is, well, what are your goals? Because a CPA is a license that is required to work in certain fields. A CFA is required by employers to sometimes work in certain fields, or it's like a benefit, right? It's more of a flex. So both are considered prestigious in their own right. They focus on different things, depending on what your goal is, what work you're trying to get into. That's really the answer. Buy-side equity research, probably CFA, but a CPA can also help a lot, because CPA is going to give you that exposure to accounting, hardcore accounting. You don't need to have hardcore accounting to be a buy-side equity research. You don't need that. That's more finance. Yeah, so, yeah. But most of the stuff you're going to get is experience, learning on the job. And a lot of those banks, a lot of those investment banks, they have programs that, you go through, and then if you make it on the other side, you're going to be pretty good at what you do. So, yeah. Larger McDs. CPS doesn't have larger McDs. I'd say that probably potentially, you see, gosh darn it, Norton, go away. I'd say that all in all, the CPA route has a lot of optionality, depending on where you go with it. It has a tremendous amount of optionality. But yeah. Okay, so there was another question. Oh yeah, paper trading. Paper trading is yes, thank you actually, Scarlett, for actually saying that. Yeah, paper trading is another one for your question out there. Yes, you can always open a paper trading account. You're not going to lose any money. It lets you get your feet in the game, get you used to things. You can start with whatever amount of money you want. So make yourself a millionaire overnight. And then you can practice with maybe a friend of yours, make a friendly competition of sorts. But, don't let it get between you two. But yeah. In the U.S., how much of the inflation are we seeing due to the M2 increase versus supply chain issues? Werner said it's due to the credit expansion. So so I don't think it's necessarily due to the fully due to the credit expansion. I think it's like a combination of sorts, because there was some credit expansion, but like what I'm saying is it's not in line with the M2 increase, right? Because if we did see that, like, okay, how much of the dollars, I'll ask you this, Will P. This is a question to you. How much of the dollars were created in the last 3 years? What percentage of the dollars? That's my question to you. And then we'll go from there. The best way to learn and read about Wall Street bets and follow their philosophy. r/Wall Street bets. No. Don't do that. Don't do that. So I'm getting 42%, 69%. Isn't the meme like 60%? It's a decent amount. Then my follow-up question to everyone, because everyone else is answering too. What was the inflation throughout the time period? And then that kind of gets you to the field. That's the first chink in the armor to the inflationary narrative that, we printed lots of money. Because if that's true, then that we should have seen that. Money printing is a real thing. And that's my one issue with that whole thought, right? It's like you're desensitizing everyone to money printing. So I talked to a random person out there on the street. I asked them, what did we do in the past couple of years? I'm like, oh yeah, we printed money. And I'm just like, oh no. Because then you know what that means, right? When the US government eventually, if they change the system and they say, oh, we're going to print money. You know what a lot of people are going to say? Like, we printed money last time. Nothing bad happened. You're exaggerating. There wasn't hyperinflation. And then they actually do it. And then we actually can get hyperinflation. So it is a lot. It is a massive amount, but yeah, the massive amount in terms of money printed in the past couple years. And it didn't cause that because that's not how the plumbing of the system works. Now, Werner is right. So Werner adds some extra nuance there is there was some credit creation. And so we did actually see some, right? We did see a lot of people, borrowing, right, for various things. And we saw that in a variety of ways. I can tell you that, for example, in the jet ski market, the jet ski market was on fire. I'm talking about these stand-up jet skis. They're actually called jet skis, but for the the normies out there, they call them stand-up jet skis. But in reality, jet ski is a brand by Kawasaki. But yeah, so a jet ski, because you ski on your feet, you don't ski sitting down. So a jet ski is actually a stand-up jet ski. The jet ski you think of is a sit-down. It's a PWC, a personal watercraft. So, but yeah, so here we have someone from Will P. March of 2020, M2 was 16 trillion. Today is about 21.7 trillion. I agree with Snyder and Lacey Hunt, by the way. I'm just trying to play. Yeah. So devil's advocate. No. But Werner's right. So that's where I'm trying to. What I'm trying to do is, like, as a scholar, as someone who's learning, I would love to interview all these guys. I want to take, and this is what I say everyone should do, or maybe I'm just completely stupid and wrong, but whatever. My personal thought on this is I like to learn from all these guys and try to take pieces here and there. And remember, like, I'll identify. I'll be the first one to say what is, like, for example, for sure my greatest weakness, my age, because I haven't lived enough to have all that experience. So how can we, as youthful people, because most of my audience, you're all considered young, by the way, between the age of 25 and 34. That's the vast majority of my audience. You're considered young, even in your 40s, 50s. You're still considered young by the older guys, right? And so, how do we kind of navigate through that and make up for it? Well, we have to learn from those who came before, the ancestors. No, I'm kidding, but you know what I mean. We have to make up for that by having an inquisitive mind and trying to learn from those who have greater experience than us. And then, I look at Jeff Snyder, for example. I look at his work. I try to digest it. I try to really absorb what it is he's trying to tell me. I look at Dr. Lacey Hunt. I really look and learn and try to absorb what it is he's trying to tell me. I look at where they're converging. And where they're converging, I might find some interesting points. I might actually connect some dots here that maybe they didn't even think about. Maybe, it's some of you might read their work and find something, unique and interesting and kind of come up with your own theories, your own understandings, and then you can act upon it, maybe. And then you also read, Werner, and then see, okay, what is this guy trying to say? And then you combine that. So you try to combine the best of all of these and try to come up with your own kind of understanding on these. But yeah, that's pretty much it. So I agree with, like, what Werner was saying. I think that there was some credit creation. And going back to my example, because I didn't get to even finish it. So in the jet ski world, so to speak, there was a massive amount of buying, right? And, these stand-up jet skis are very niche. These are two strokes that they don't even make them anymore. And, they were going for crazy amounts of money. I think I could probably still sell mine for more than what I paid for it, which is weird because it's supposed to be a depreciating asset. And even in boats, in boats, the dealership was offering $15K over what was paid for the boat. So it's crazy. Like there's no, but that's more like a supply thing, because from what the dealership was explaining to me is like there's no supply. So there's just none there, right? And so, people are willing to pay crazy amounts over still, right? Because that was 2 weeks ago, which is insane. But that's like different levels of the economy. There's different things. Because I think the jet ski one has slowed down a lot because that's on the lower price points. Like you're talking like 5K, 10K on the expensive ones. But yes. Okay, so... okay, Dan Weston, next interview, a sub, you should interview Ricky and Julius. I mean, hey, I'm completely down. We'd have to keep it PG because of YouTube. But, if you guys message me, for now, because of the size of the channel, I'm absolutely able to do that. Right? As it gets larger and larger and larger, the ability becomes, obviously less and less and less to take on newer people. Okay, so, yeah, because... there's obviously going to be a greater and greater request. So yeah, I'm more than willing to do that for the subscribers, right? It could be, but obviously like it also has to be that people want to do it. The ladies bring the coffee and Elon brings the I almost finished that sentence. Oh my gosh. I almost finished that sentence. All right. So man, I actually Googled, you guys are hilarious. All right. So, I think on that note, I'm going to be ending the stream here. How long did we go for? Depending on how long we went for. How long has it been? You know what's funny, guys? I'll actually tell you this. Do you know my best performing videos? I think by far. It's almost like YouTube is also telling me to do them, is the live streams. The live streams perform the best in all directions in terms of average view count, retention, regardless, everything. I think they're the ones that perform the best, which is interesting. So I was actually discussing that like I don't want to change and be like, doing only live streams, but it's interesting though. And do you guys find like these live streams are the absolute, like you like them a lot? One more hour. My wife would kill me. Not going to lie. Yeah, she just texted me, hey, it's 10:30. That's it. Over an hour. I text her, no, the people want more. Oh, that'd be funny. No, you pay attention to comments. People love that. Okay, yeah. I mean, I attempt to do always my best. I'm getting better. You see, I made it down to the bottom of the comments. Sleeping on the couch tonight. There's a very comfortable couch, just so it's not that bad. Yeah, so I see. Yeah, these are pretty popular among the capital mindset community. And by the way, it's actually like, so at the end or the conclusion of this live stream, the views will be there, but then like most of the views come after the fact, which is actually the most surprising. So most of the views don't even come in live; they come after the fact. So I think it's because of the European audience that then comes in, and it gets a lot of like viewer retention in terms of like the percentage. Bullish on Sleep Number. Yeah, bullish on Sleep Number. Boring auditor talk. Yeah. I do play chess, Will P. I do play chess. I actually was on the chess team in high school. Do I enjoy the live streams? I do enjoy the live streams. One, the live streams allow me to think aloud. They allow me to think on my toes. It allows people to ask questions live where there's no preparation. And that allows for even, so for example, if someone wants to have a criticism, they can address it live and they can try to catch me off guard, so to speak. So, it serves a lot of key things, but I don't know why it doesn't attract these audience or that audience or whatever, but it's reasonable to expect future average PEs to be greater than the historical PEs. I'm sure that there is a flaw in the thinking, but I've always thought, well, that has everything to do with what are the alternatives to investing. If there's the alternatives to investing absolutely are garbage or low yielding, like for example, risk-free rates of return, yields on interest rates, right? Those drop, you should expect higher multiples for PEs. So, oh yeah, Ricky, I really enjoyed the Discord calls. The Discord calls are great. Those are nice because I can hear your voices and stuff. London for the win. Heck yeah, Will P. I mean, I'm telling you, like, I get off this, and then kind of like the other side of the world starts to wake up, and then that's actually where the majority of the views actually come from. I just want to be donate to Xi Jinping. Elemental. Can I tell Elemental? People do not know that you're absolutely trolling. Some people do not know that you're trolling. Stream the next Discord call, get banned. Oh yeah, it'd probably get banned because the Discord call, you know, people are a little bit more open. No, I mean in chess. Oh, I don't understand. I'll be on Andrew CPA channel next Tuesday. Government auditor life. Very interesting. So I actually like his channel a lot. Because he gives a really interesting perspective on the industry. So I'll watch that interview, Dan, and I'll be able to see. Are you going to show? Well, at least I'll be able to hear your voice, and then I'll be able to learn a little bit more about that. Oh, he meant chest. Ah, okay. Well, let me read the comment again now. Now I feel silly because do you play chess? London for the win. Chest. He meant chest. I'm so confused now. Oh my gosh, I'm actually getting spammed. All right, guys, I actually have to close the... Yeah, I'm going to have to head out. Okay, so I'm going to go because actually I forgot we have to eat dinner. I haven't even eaten dinner yet. So it's, 10:44. All right, guys. I am going to head off. 90 Twitter followers, shirt off boy. Okay. Maybe I'll do a shirt off if I get to 100. Okay, if I get to 100, I'll do maybe a shirt off. All right. What are we at now? We're at 90. All right. We're at 90 followers on Twitter. You shall not leave. Oh, gosh. 90 Twitter followers when you get to your wife. Moving goalposts. Moving goalposts. Bad dog. You guys are hilarious. All right, guys. Love everyone. See you guys on the next one. Check out the videos tomorrow. I have 2 dropping. And then hopefully we have the live stream with the boys on Saturday, and then you guys can check us out there. All right. And thumbs up because I'm bad at promoting this. So if you enjoyed the video thus far, don't feel free. I'm not forcing you. Feel free if you so are inclined to leave a thumbs up. And then when is Orlando Bloom coming on the channel, dude? Orlando Bloom's been a lore character. Capital Mindset has some deep lore at this point. There are a lot of people that are building up the lore in the Capital Mindset community. All right, so I'll see you guys on the next one, and I got to go. Bye.